8.69 million, on the prior 8.756 million, with a range of 8.836 million to 8.474 million. And also get construction spending month over month for the US, forecast 0.3% on the prior minus 0.3%. One minute remaining now. I'll lead with the US ISM manufacturing PMI. Ten seconds. $49.2, lower than forecast 50. Jolt's job openings at 8.488 million, 8.488 million, lower than forecast 8.69 million. ISM manufacturing prices paid 60.9, higher than forecast 55.4. The new orders index at 49.1, lower than forecast 51. Employment index at 48.6, higher than forecast 48.2. Looking to the markets now, just seeing some weakness in the S&P 500, a bit of strength in the dollar after a whipsaw as well. Also, US construction spending month over month at minus 0.2%, minus at 0.2%. lower than forecast 0.3%. We have posted out the ISM Manufacturing PMI April reports on the feed for anyone interested. Keynotes are that new orders and backlogs are contracting, production is growing and employment is contracting. The supplier deliveries are faster and raw materials inventories are contracting. Customers' inventories are too low, prices are increasing. Exports contracting, again imports are growing as well. We've also posted out the JOLTS job openings full report, that being for the month of March. Treasuries hold their gains after the mixed ISM manufacturing data. Just noting some commentary from Wall Street Journal's Nick Timiraos on X. It says there were 1.3 vacancies for every unemployed worker in March, that being the lowest since August of 2021. Notes that private sector job vacancy rates again fell to 5.3% in March, at the lowest level seen since January 2021.
Hello, friends. So, no change from what I originally said. Projection of R56, it's the same levels from last week and the week before that. Sellers want to keep us below this 56, 63. Usually on FOMC days, we see a balanced market. So once we determine the range which participants want to transact in, it's usually pretty much a safe bet to play those edges and then don't look for more. If you think about it, it makes sense that there isn't going to be a ton of initial positioning on the day if we have huge volatile news later on. So you're not going to see a ton of higher time frame traders putting on positions for before we get the actual news coming out, right? Anyone who wanted to be in the market is most likely already in the market. So we expect kind of a range or a balanced market on the day until we get the news coming out. That's usually how it works. We do have an overall downtrend, right? But we should kind of expect that unless we can get back over 63, that the market should probably stay in this lower balance with a slow grind down, just kind of keeping the trend while also basically this area. We'll see if that changes, right? We'll adapt with it, but usually you don't expect a ton of big moves until FOMC out. You expect rotations. Play the rotations. Today can be one of your better days, or it can be your worst day, depending on how you interact with a ranging market. Usually just going into it, understanding not to be expecting too much until that decision out is going to save you a ton of stress by just being able to take profit at our edges instead of looking for runners. Taking what the market gives you.
So looking now to the Fear and Greed Index, 43 out of 100, which indicates fear, while the Crypto Fear and Greed Index is at 54 out of 100, indicating it neutral. Keeping an eye on the VIX as well, it's currently up 2.5% at around 16.04. China vows to roll out policies to boost economic recovery.
Keeping an eye on the Russell, testing our value low here. Russell breaks down and continues this channel.
In 10 minutes time
don't
at
expect the
10:30
market to
a.m.
go
Eastern, we
up.
get our weekly EIA inventories. Crude, a forecast draw of 2.5 million on the prior draw of 6.368 million, with an expected range of a build of 1.5 million to a draw of 4.572 million. Gasoline, forecast draw of 1.02 million on the prior draw of 0.634 million. Distillate, a forecast of a build of 1 million on the prior build of 1.614 million. Cushing, prior draw of 0.659 million. In 5 minutes time at 10:30 AM Eastern we get our weekly EIA inventories. Crude, a forecast draw of 2.5 million on the prior draw of 6.368 million. With an expected range of a build of 1.5 million to a draw of 4.572 million. Gasoline, forecast draw of 1.02 million on the prior draw of 0.634 million. Distillate, a forecast build of 1 million on the prior build of 1.614 million. Crude, on the prior draw of 0.659 million.
Oh, I said, yeah, I think so. I usually stay for FOMC days just to make sure that you guys don't blow up your accounts. Everyone trades bell to bell every day. What you tried to say? Oh, yeah. So far, following our pathing. We'll have to see what happens today. Be a big decision point. Off of our no man's land above. Could be the next leg down. But we've gotten our move up. The relief from shorts closing.
OPEC
Off this
crude
big
output
move.
fell 50,000 barrels per day to 26.81 million barrels per day in April, according to
They
the survey.
should determine what the hell's happening.
1 minute remaining. I'll be leading with EIA crude oil inventories.
Yeah, probably. Is the classic.
Ten seconds.
Just utilize our reversion
A
zones.
build of 7.265 million, a build of 7.265 million, that's higher than the forecast draw of 2.5 million. Gasoline, a build of 0.344 million, a build of 0.344 million, that's higher than the expected draw of minus 1.02 million. Distillate, a draw of 0.732 million, a draw of 0.732 million. That's lower than the expected build of 1 million. Crude Cushing, a build of 1.089 million, a build of 1.089 million. US oil futures extend losses, down 1.2% after the US EIA storage report.
Liftoff of mission 41B, the first flight of the orbital Discovery, and the shuttle has cleared the tower.
We have posted out the weekly EIA inventories report to the feed for all those interested. The Department of Energy says the US SPR is up 0.594 million barrels at 366.271 million barrels.
But man,
US crude stocks rose last week to the highest since June 2023, according to the EIA.
I mean, right now, guys, again, like, I think it's going to be probably pretty slow until FOMC, but we have our value We see that NU has recovery of value low here at 58, right? And we are now rotating back up for 17,500. Considering that probably the top, we look for any excess there as we rotate this node, right? And as we come up into value, we'll watch to see if we can build at value high, or if this excess will result in a look back into this range and then a rotation back down through the range. Usually on balance days, we see excess outside of value and then a reversion. Basically, this edge will become resistance, so a rotation back down. So we'll just keep an eye on that. Understand that this greenish blue area is our value, right? So ES is now testing our value high on the day. We have a node above us at 59.50, and we are currently challenging that 56, 54 area on ES. Ideally, Russell needs to bounce here at this value low, 81.5, if you want to see any more upside. Right, we want to see the value hold here as supportive for up to 60. If this becomes resistance, we have a weak Russell. We shouldn't expect more. Understand that, again, we usually rotate 3 big nudes, so keep it in mind. Think about on ES, this green box, this red box, it's kind of like your extremes. So unless we're gonna start going crazy trend-wise, kind of expect price to just one of these zone. With our smaller rotations being within this node. Any sort of excess outside should be a stop. Well, so So Russell below value low here. ES back into our value off of a failure at the highs. So just, again, probably continued rotations in our zone. Just expect balance. 51s, of course, is going to be your POC inside this range. Need to see acceptance over 56. We're back down to 51s, and then 47s. So middle of our range here. Russell leading down. If we see a steeper rejection below 75, I think that at 60, 53, 50 areas most likely where we'll bid. Basically just battling for VWAP right now, so hard to say as of yet. But we should be definitely expecting buy side to be down there at that 60. I think you get a relief here, probably a reoffer, and then we get direction. Just bouncing at our POC, our VWAP, right? So expect a bit of chop here, probably a retest of our value on the Russell, and a decision, either reclaim value and a push up, or rejection here, and then we can look for a seller again for a secondary leg. With the divergence with the Russell down at our reversion area and below value, with ES and NQ middle of our value, it makes it a bit tough to try to make anything like incredibly actionable. You should look at 51s and 7750 as the low as of right now, because that's our PVC. But understand that if this doesn't hold and this becomes resistance, then yeah, it's become a target. Same with 51s into our 47s. New 15's just opened. NQ into value high at our 17,500. Top of range. Oops. D6 is hold. We just look for 59.50 and look for seller to be positioned there. Really not too much to say. Back to our 500s on NQ, top of range. Russell held our 84.50, our PVC low. Looks like it wants to rotate back up to the high HI. We look to see if XS builds above that or if that will be our top. If 59.50 becomes supportive, we look for ETH high back up at 65, 66 area, back to our top of our reversion zone. Yeah, this is where I'd expect sellers to be present for our first test. We watch to see if the NQ build outside of value here, or if we get the look back in below 500s, offer stepping in, and then the rotation back down. Again, between our two reversion zones, the green box and the red box on our charts, I don't really expect excess outside of those areas. We should expect rotations within, and then reversions back down to value. So you want to see a really strong bid here, ideally on 500s. We push down into it, or expect that to kind of top. We'll look to see if buyers can step in here, gain a flag, or a push back down to POC, and then back down to that 77.50. It makes sense to me. Second in. New PVZ just opened. Again, 56. Just our same level I've been talking about. It's just value high. Looking to see if buy side's willing to hold that, or we look for that push back down to 52s on ES, and then of course 48s. So the test right now is, can ES maintain value high with the Russell and NQ still within value? NQ rejected value high and pushed back down, doing the full range rotation that we were just talking about. This is our test here at our 84.40 on RTY. This is the middle of the range. We want to see if buy side is willing to maintain that higher low, or if we need to push back down to I think the Russell maintaining this 84.80 is going to be key if Yes wants to hold 56s, or the weakness on both NQ at POC here, as well as the Russell below 84.80 result in turn back into value. We want to see bids be able to bend these higher lows, or rotations back down to value lows make the most sense to me. Watching our zero tick, of course, as well, the rejection of 500. I'm just an eye on value. Again, we expect a pretty slow market. If slow and range bound are not what you like to trade, maybe go watch a movie. Go touch grass. You know? His first PT on NQ off the rejection of 500s. This is previous value low from period 1. That becomes resistance. We look for the full retrace back down to today's value low in the day at 61. We're looking for a small relief bounce here, and then sell side willing to step in to defend this once we see step-ins below for that mech down to 61s. RTY is still just rotating ticks around POC, still no direction decided. Basically just looking for sell side to be present at 86s. Getting a bit of relief here, retesting back up the POCs, get acceptance now at this lower edge, and make it a bit smaller. It's gonna be all about node rotations today, as it usually is. On these kind of days. I doubt you get the breakdown below value high on ES until we see 0 become resistance. If that continues to just bid, and RTY continues to bid at POC, it's gonna be really tough. Make an argument that makes sense that a break at these higher lows is going to happen immediately. So, need to see that Russell breakdown with NQ, and then ES should follow suit. Again, things are just going to take a lot longer than you want them. Just, it is what it is. NQ coming into our secondary target, down into 60s. That is your full rotation of value. This is PT, 6150, and then we look for any sort of excess. Inside of this 53, 58.75 is where I'd like to see the bid. If we don't see that buyer step in there, we expect relief and rotation back up. So I don't really expect more at these lower edges. Any sort of excess, we look for buy side to be willing to bid here, a failure at value high. Then we look for this to become resistance and play down to this lower river if it does come down further, but you shouldn't be expecting it. We watch what our reaction here as Russell comes back down into our value low. We now have NQ and RTY moving together, right? So that's a good sign for the market. No more divergence between our indices. So just look for buy side to be present here. Move your stops down if you are in the short from either POC rejection or above at R500. Look to see if a buyer will now bend this or look for a move down to like 42, 40 area. ES still has a bit more on its rotation. Again, just the rejection of our Russell POC acceptance below gives us talked about. Now it's just about where these things will bottom out. This is ES POC here off the failure at value high. Again, things are just going to move a bit slower than you want, but the rotations should be pretty textbook. You know, is what it is. Balance. So again, look for this 53 to 60 area now to look for a seller. We're going to get more, but we have come down fully to our reversion zone. Russell has a bit more room, ES has a bit more room, so we can get a bit more excess if we want on NQ, but I wouldn't be expecting it. If you're in a runner, fine to leave it. Just, if we push back over 6150 and show it as a supportive bid, look for rotations back up to 76 area. We're looking for ES to now find resistance at this 52 to like 54, right? Just can we build below POC, just like we did on Russell. We've done half of our rotation. We want to see if sell side is willing to defend here and then come down into that 40. Yeah, I think you're just gonna have kind of a slow day in general. OMC. There's just expecting anything other than day traders to be trading right now, and liquidity being provided for that is just a fool's errand to think. No one's putting on real size before major. Good way to get your account blown, or all of your accounts blown if you're a firm, right? testing our value low here, trying to look above. Yes, battling with our POC still, and Russell as well, attempting value low. See if seller's willing to hold this below value for continuation, like we talked about, as we test into our 0 tick as resistance. If we're going to get any more you have a minute left until new 15's open. New 15's just opened. Projections on RTY value low and NQ value low. Looking for that move down into ES value low, ideally, if POC continues to hold. This is our target on ES, 48. That is your value rotation on ES. We get some excess down into 44s if we see the breach below 48s, but again, looking for more. Just move stops down, don't go out of your way. Everything coming down to our reversion zones. I'm out 2 into 46. Legs out another 2 into 44. For NQ, just watch this 410 ETH low. should happen as we approach that 44 NES. ETH low should result in ideally a bit of a relief bounce and retest of our 48 on ES, I would assume. Right, just retest a value low like we did on RTY and on NQ. So waiting for NQ in the Russell to find this low should result in some short-term upside to retest our resistance. You guys see what I mean by taking a bit longer, but looking for just this excess on the outsides of value? Just look for rotations back. And once you get kind of that game plan down, it makes your life quite a bit simple nowadays. Note the relief bounce that we're getting off of ETH low on NQ and into our Russell reversion zone. You are getting your retest back up to value, right? Move your stops up if you are taking a long off the stack signal or ETH low or reversion signal. This is our first real target here in the 33s. Above that, we look for value again. This is 48s and our value low on ES off of the bounce on NQ, ETH low, as well as our reversion box on the Russell. Let's watch our values. See if we can bid back inside. Zero test here on tick as well. I think the 81 level on RTY should decide direction. NQ has a bit more room it can go up. Buy side is going to engage here on ES. You'd expect them to be doing it into our value lows retest. 48. Watch to see if 0 can hold with this 48 bidding. We're gonna hold the value now. Russell's still battling for our 81, trying to get acceptance back in. NQ flagging. Our secondary PT on NQ, value low, as ES is now ending with our previous POC and current POC off of EVZ. A lot of P's. So watching this area here, seeing how we can test with 52s. 52s can become supportive. We can look for that look back up to 56 for the full range rotation off of the hold of 48s. Would like to see NQ get back over value as well. Need to contest with this 51 to 61. 51-61 should be sell side, but if we can make it supportive, then we should be able to look up to 75s and then probably 500 again. So again, just doing rotations. Slow, but again, like if you're patient, understand what we're looking for and not looking for a ton of excess. It's not terrible. $30 seconds until new 15s, new hours. Buy side has to step in here, just like 45. Loss of 45s and a look below and like the ladder moving down is not a good look for NQ. You need to see that push over 61s relatively soon if we're going to do another rotation. Testing our 61 no. A good first PT move stops up if you're playing off of any of the higher lows. Need to see acceptance back over 61s, map the bid, and then we can look for POC. Again, 75 first target, the hold of 51, 61. Invalidation below 45. Your full rotation on ES off the hold of 48s and our value low, back up to our value high at 56. Pushing into our 75 target as well on NQ. Russell has now entered our value, looking for 81s to now be supportive ideally, but understanding that ES is now at the top of its range. 75 is our VWAP, so just good risk off here, or move stops up. I'm out 1, 75s. 75s become supportive. We look for push up into POC 85 to 92. That is our next area where we want to see buy side recover or a move back up to 500. Are you guys understanding like the excess outside of value and then rotation back up test? Does that make sense? Was I clear about that from this morning? We see it playing out. Do you have questions? Here's our test here, and then Q, see if liquidity is still present. Watch Russell in the 81s, retest of our value, and the 61. Really, it's like 59 to 65 is where we're looking for buy side to be present here. Going to get the lift. If not, then we get another rotation back down. So really want to see presence here from buy side. We're looking for a retest of value. This should at least offer a pushback in value high and decision point. If we do see the buy from Russell and NQ here. POC retest 52s on ES. Still waiting on the Russell to find bid at our value. Kind of stagnant. NQ into our value low. Would have liked to see that bid happen a bit higher. We're okay still. We just now need to keep an eye on that 59 to 65 for the offer. Your last hope. Really surprised by that actually. Expecting a lot more from NQ there. Retesting our 45s, pushing back down to value low on ES off the failure. Russell had way more influence than I was expecting. Be interested again over 45s. We can see the Russell show any sort of reaction. Expect sell side to be present at the 45 until then. Yes, into our value low. 50 seconds until new 50. If we breach below our overnight low and can hold it, or if this will continue to act as a reactive level. Looking for any sort of excess below to take out this most recent buyer at the lows on NQ. Yes, back down bottom of range. Russell has a little bit more to go if it wants it, but basically just play around the CTH low, I think. Once the Russell bottoms out, should be able to play another rotation. Until then, just be careful. Again, watching our like 12 on NQ. Back down to our reversion zones on ES and Y. Need to see if there will be a stronger shift of trend here, or if we get another rotation back. Testing our overnight low now. Yes, coming back up to our value low. RTY as well. See if we can make these supportive. Look for sell side to be present at the value lows. Yeah, I'm not really expecting one more below these areas. Still need to get over that 45 for seller to be invalidated and put back over 50. Watch to see how we build here. Can sell side gain acceptance outside of value? Need to reject us here. Or is it more of the same? No, just a couple of rotations around value. Might be another one in a second. Just got our look below our overnight low and then the immediate bid stepping in. Now trading back up to our 45s here. Just keep an eye on your tick rotations between negative 500 and 500. What we've been seeing is a full rotation. It's pushing into 500 from negative 500. Usually negative 500 and then 0, and then a retest of a higher low, and then a push up, and then a hold of 0 gives you a continuation. Nothing unusual. And then just trading back from value, looking for the reversions inside our reversion boxes on PVZ. Just looking for the plays back up. As soon as we see Russell and NQ find that low, the market goes up. Nothing new. Don't expect a ton more outside of value. Expect reversions back to value. Testing our 45s now. Yeah, I mean, today's... Personally, I think FOMC day is one of easier days to trade. As long as you're not expecting continuation. Because we have a pretty solid understanding of what we expect to happen in the news. So as long as we don't like change, like try to force a narrative, then like rotating just kind of makes sense. The day trading market until you see someone show interest that they want more outside of balance. And I mean, I don't mean easier in like, it has, we have more variables, we have more known variables, I guess is the best way to put it. Like, because we know that there's volatile news coming out, and we know that participants aren't really going to be positioning for higher time frame here, we understand that a range is most likely for pre-news. And if you go back and backtest previous FOMC days, you can see that we trade in balance before the news. So when we have a history of something happening, we've traded the same action multiple weeks in a row, you know, multiple months in a row. You then have like an idea of what you're looking for, and then you just play around that until you see something shifts that narrative. Looking for 65 here on NQ off of the hold of 45s. This is Russell POC off the hold of value. And another rotation on ES. I'd like to see this 52, 53 area hold as supportive for that push back up to 56s if it's going to do it. And just as before, need to fight for this like 61 on NQ. Watching this retest of our value low on NQ here. You can see how we built last time from this dip to ETH low. Build at our 45, then the push, the acceptance back into value here, chop, 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 to this 50. Then the 50 led to that push up to this 1, 5, and then we saw a dip, and then we saw acceptance back above. That 61, 65 then became supportive, and then we got that look back up to our first period value, 77s. Target was 75s, right? So just doing the same rotation and covering the zones, rotating back up. Hold of our value low, good sign, that push. See acceptance again over 65, 60. So this will be where our seller sells. Above that, we can look for 75s, 90, 500. Now it's just a battle of, can ES maintain POC? Can the Russell reclaim POC? And NQ hold value low? If those things can play, objectively, we should continue up, rotate back up to POC and value high. Just exited 2 here into 65s. Look for more back up into 70, 75. We're gonna get it. .45s holds, or we probably rotate back down to 25. So really watching to see if we can build here. Failure, right, will just result same action that we saw as before. Push below, re-offer 45s.
So soon reports that the Fed, FDIC and OCC won't completely redo the January 2023 proposal, but officials weigh changes to how market risk is assessed in its plan and discusses finalizing bank capital rules as soon as August.
Again, some people are really great at trading balance. Others are going to struggle immensely on days like today. And you just have to either, if you're the ones that struggle, right, just practice on paper if you need to. Just learn to respect the rotations. See how you should be sizing what your stops need to actually be if you're struggling. Or just don't trade on these kinds of days when we know that balance is very likely. Right? Like that's should be self-explanatory at this point. FOMC is a balance day. We expect chop. Expect rotations. I like this kind of chop. Days with structure are nice. Allow me to size up. But this could be like hell on earth for them. Let's just like understand. Or like, I'm usually done trading by FOMC, then I don't watch FOMC and start to settle down and show anything. Whereas the degens hate this pre-market part or pre-FOMC part, and then YOLO their entire account. The one candle that goes 100 points either direction. And it's like, why not trade the structured action where we understand that price is limited in where it can go and trade the rotations rather than gambling which way we're headed. Way more unknown variables into FOMC with JPOW talking every 5 seconds, saying something dovish or hawkish or, you know what I mean? Like, it's just, like, why? Why are you allowing your P&L to be dictated by what the Fox News reporter says? Asks him, like, what? Why? happen. Flies off in a direction 100 points away from where we're trading. Another bounce off our 45s on NQ back up to distance. No change. I mean, I don't think there's anything wrong with looking at the, but it just depends on what you're looking at. In you're playing like red candle, green candle, then yeah. You playing higher lows? You playing recovery of key levels and rebids, right? Like, just like, I mean, I trade off of a 15. Definitely not a problem, but I also understand what you're saying. You're getting too caught up on candle to candle. Or yeah, I mean, I think it's easier said than done on days like this, Kevin, where I think like you should probably just be looking for like an initial position and then trading into a level, unless you see like a hold of something that's very key. Balance days aren't the greatest to add to positions, but can do it. It just requires you to be very comfortable with potentially taking your full positions break even after you've added, which is hard to. Well, like, I'll take like an initial shot, especially on days like today where like my initial shot here was down at 410s as we found this low with the Russell coming into the low, and yes, also finding that bottom. after we got the look down, and then I took my initial ad here as we were attempting into our overnight low, but then I added my full size on the look above in here. Like, these two entries look pretty shit, but like it moved my average up into 12, which is all I cared about for hold. So like it didn't really matter. Initial size is here, my ads are here, that then moves my average down right here. So nothing's invalidated about what I'm looking for or where I'm looking for price to be able to hold, but I've now been able to add on a candle where I saw an active buyer and like put on my full size then, and then just let this sit. So I'll do stuff like that, and then just look to take full profit out as we approach our highs. But like, if you add to a position, I'm now looking for a much larger move than just like I want more. I'm adding. But like again, like it's pretty hard on days like this. But you can see what I just walked through. Like, that's what I just showed. But, like that's me putting on full size, exiting, waiting for that, and then like my invalidation is break even. Whatever my average becomes. Like either it works or we're looking to re-enter when we see something better. Try again. Could I have added more size again at that 20? Probably.
US Secretary of State
But like I was
Blinken
already
says
full
Israel
size,
has
waiting for
made
this
very
just
important compromise over the proposal for the hostage deal. Says there's no time for further delay and haggling. Hamas should take it.
Like I saw a buyer there, we actively see that buyer rebid, and then we push off. I could have added another there, but because I had already added position based off of seeing that person interacting there, like I was already sized for it, and I was already expecting it to be defended. So like I don't need to add them more. I'm just waiting for that level to hold, and then we look for more upside. So like on the 15, it doesn't look amazing, but like it held where I wanted. And then we traded into our 65s. What do I care? But yeah, I think like on days like this, just waiting for everything to come down into that low. Waiting for like that last leg, Russell as
and
well.
US Secretary of State Blinken says
Thank
we have
you.
seen in the recent weeks real and meaningful progress.
Like look at this dip that happened on N compared to the Russell. Like this was such a more drastic move. And I even said it. It's like I was not expecting this much. But like once we've created that excess, it's like, okay, well, the rest of the market's still trading very balanced. And if we see the same things happening on RTY and ES at the time, and we're still rotating just negative 500 to 500, then like nothing's actually shifted in my overall idea. And this is just going to be a much better opportunity to grab on it compared to ES or RTY, because it's moved more to the downside off an extreme. So like when we go back up, I now have more room to let a trade run. As soon as we do spot that bottom across the market. But like the safer trade probably is just trading the Russell because it has the best structure to play off of. But if you're looking for the most points playing off of our balance structure across all three, then it's like, okay, well NQ is clearly the right. Expect more volatility in our definitely. So like if you're not in a position, this retest as we put back down into value on this attempt, easy trade back up to PO. As long as we're seeing that willing buyer and the bids hold on the ladder here, as price pushes in, we see an immediate lift, right? We can play this back up. And I think that's a fine trade to take, but I think that anything other than that is going to be hard. Like, I want to see these value. Basically, like, the only I'd be playing off of our known seller. Because we expect chop within value. We're looking for the moves back into it and trading. This is our first PT. This is our second PT. Now we expect price to kind of balance. Do I want to be trading balance or the rotations back up? That's why I mean it's like it's kind of hard to add. You just have to find those lows where we're expecting them. And then looking for the recovery of levels, playing back up. There's probably another viable trade if 65s become supportive once that seller's gone. They've shown their hand. But right now it's either you're playing off the value edge or you're shorting off of 65s. Does it get crazy with futures? Yeah. All liquidity dries up on all of our intraday levels, and only our main levels on the higher time frame are going to matter. And then we look for the volatility candle to be put in. We mark the low, the high, the halfway back of that volatility candle, and then we trade around that. Usually you see either a half or full retrace of the entire FOMC candle, and then a directional decision once we retest the 50%. That's usually how FOMC days work. And then we usually get directional continuation while JPOW is speaking for the entire period from which way we hold of the 50% of the volatility candle. And then after that, market either retraces the entire move or continues in that trend just as liquidity steps back in. Looks like we're testing that 45 seller again. Now we're off, we're sitting. We're testing our value low, trying to gain acceptance still. I think this is going to be dependent if the Russell can make this POC node supportive, or if this offer is going to hold here for that rotation back down to value low. That seems to be the only thing that's really holding us here. If Russell starts to trend with NQ and ES downside wise, right? NQ riding us down right now. But if the Russell follows with NQ and they both fall, right, we expect a push down. Nothing holding us up. So just keeping an eye on this POC test on RTY. Understanding that we are in the middle of our range off of a failure at the highs. Yes, back down to value low. New 15's just opened. My trending list. FOMC, Fairly Odd Parents, Terrorist, and Where is Biden? Okay. Oh, they're redoing Fairly Odd Parents. Roy, did you know Fairly Odd Parents was an isekai? Did you know that he wished to stay young forever? He's like actually like a 45-year-old man. They allude to like him being old multiple times in the show. Even an episode where like he becomes like his older self. Very weird. He's actually 60 years old. This is what he actually looks like. And I want to move the stream over to Twitch today, just so I can blast my own music. Getting copyright striked mid-stream and then turning off my stream, it's just a little much. YouTube. I'd have to set it up. It's a bother. My OBS isn't configured for my Twitch. Do a chess stream. Wait, we can do some AI music. Let me open the old Sono. Oops.
Discovery Houston, press to ATO.
Liftoff of mission 41D, the first flight of the orbit of Discovery, and the shuttle has cleared the tower.
Alright. I want to see what everyone can create. Type in a prompt on this website after you log in, and it will create a song for you with the description of both the genre and the lyrics. Or you can just do like random genre fusion. And it will create 2 songs. I think our credits reset, Roy. Yeah, they did. They're weekly. So all of our old accounts now have credits. Our first day.
夜の闇一人きり泣く魂を失われた愛を探し求める遠くの
This song was created in 15 seconds.
遠くの星が静かに見守る傷ついた心を癒す光を Tragic souls in the night Searching for love in the pain
Japan is considering regulating large and domestic and international AI developers.
Healing the wounds where the sorrow lies 過ぎ去った日々に懐かしさが残る
Yeah, man.
でも希望の針がいつも輝いてる手を差し伸べて共に歩もう消す光を Tragic souls lost in the night Searching for love in the pale moonlight Let the stars guide through darkest of skies.
See if we can find some ED.
Wounds where the sorrow lies. Demo 希望の針がいつも輝いてる手を差し伸べて共に歩
We're just looking for a lift over 45s and acceptance, and then we get a rotation again. Almost positive.
Tragic souls lost in the night
And I
Searching for love
back to our 45 now. Still offer.
Let the stars guide through darkest of skies, healing the wounds where the sorrow lies. 遥か彼方へ新しい旅路を優しさと愛で心満たされて You can be my golden sunshine, baby. You can be the one I call mine. When it's cold at night, you can warm me up. When it's
Blows my mind that AI made this in 15 seconds.
we can play under covers. We can play like lovers. Here now with you. Pull me down for
Watching this 430 edge on NQ, see if we can maintain higher lows. Again, we just need to see the look over 45s. Sellers sitting there. We want to see this buyer defend 430 ideally on any look below, just immediately get bought. Or we probably come back down to our overnight low. So really paying attention to this 30 edge and our 45 edge.
The White House says there's no response from Hamas on the ceasefire and hostage release proposal.
We'll respond. Back to our 45s from 30 bid. See if offer sticks here at 45.
So just a reminder, you can trade the FOMC with us at 1:15 p.m. Eastern Time live today, and our very own Tony will be going over fundamental prep ahead of this release.
Our very own. Imagine trading fundamentals into FOMC. Holy. Tatum, I want to hear a AI song that you... I'm trying to get an entire playlist for stream that's just created by you guys. Yeah, go to that website. It's super easy. Yeah, 'cause it's all copyright free. Another 45 rejection, back down to our 30s, 15-point range on NQ. Probably waiting on the Russell to come down to value low, to be honest, before we get a decision. Flex, you should play around with it, actually. You can do some ridiculous things. Good memes. Another bounce at 30. Again, identified buyer at 30s, identified sellers at 45s. Just rotating while Russell figure out what it wants to do. ES needs to recover 48s as supportive, or this is just a value low retest on the outside, right? So resistance. Watching as tick comes down as well, right? We've broken below 0, so kind of looking for negative 500 ideally, bottom of our range on our tick oscillation from the high of 500s. We've now been slowly melting down with basically a neutral tick. So as we approach negative 500 into our tick basing, with the Russell coming down into value low, we can look for a potential bottom there, or just whenever the Russell is able to actually step in and catch a bid. That'll kind of be our signal to let us know that another rotation is likely. Till then, you have a very neutral market with oscillating 0 tick with a slight bearish flavor to it. Word. It's a downtrend. Waiting for Russell to come down into value low. Either it maintains the higher low here, right, or we do the rotation back down to the 77.3. Approaching that negative 500 basing on tick as well.
Harsh silver linings that don't surround me in a world of two-faced posses that dislike me. Differences we never cared, but now it's quite frightening. When do we stop fighting? 'Cause I know that we can make it. 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 ' choices encircling ourselves with regret. We were once family, now we are in different spaces. How when they've forgiven me, that just isn't in my picture. Odd misplacements, secret little mysteries. Skins a little thicker, but still it just seems so haunting, but not surprising. Just isn't my picture. We were once family, now it's fantasy. When the toxicity in our world runs its course, will we start to think rationally? Or are we bound to do more harm to the ones that gave us love and warmth? Do we outgrow the cruelness in our cores? After all that it seems we just can't forgive once more. Living in a different space, ever-changing world just keeps on circling with our lies. Hard choices encircling ourselves with regret. We were once family, now we are in different spaces. How when they've forgiven me, that just isn't in my picture. Odd misplacements, secret little mysteries. Skins a little thicker, but still it just seems so haunting, but not surprising. Just isn't my picture. We were once family, now it's fantasy. Is that what you mean? You wanna live a fantasy? Pretend we are just one big family. Just know we are living in a different space. Hard choices encircling ourselves with regret. We were once family, now we are in different spaces. How when they've forgiven me, that just isn't in my picture. Odd misplacements,
Our first test to see if this 30 buyer's offsides or if we can find a relief back above. Russell still just sideways. Still hasn't come back down to value low, but it is trying to maintain a higher low. Rejecting our 0 on tick as of right now. Things are just balanced still, choppy. Need both RTY and NQ to find the low for the rotation, or it's just little scalps based off of where we've seen buyers and sellers. Way to see more.
Shortly expecting the results of the Fed reverse repo operation. $69 counterparties take
Russell into our value low, finally at our target.
$448 billion at the Fed reverse repo operation.
Watch for a reaction here. See if the Russell can find a base, this higher low and value low. watching for tick to come into that negative 500 as well, ideally. Immediate bid on the entire market as soon as the Russell hit target. Need over 30s though for anything more than a scalp. Do you like it? I think it's an OP character done well. Like, it's definitely a mid show, but like if you enjoy the genre, I think the art is good. And I think like it's decent. Yeah. Again, like I think they do a really good job keeping it interesting with him being ridiculously overpowered. Yeah, I mean it's definitely it is what it is. Higher low on tick, Russell maintaining a higher low. Just looking for this base to be able to occur and a rotation where 0 tick is not our resistance down into our reversion zones, right? So just looking for excess down here, sellers to get off sides and then lift back up. What's up, Nick?
At 1:30 p.m. Eastern Time, we expect comments from ECB's DeCoz, who gives a speech on monetary policy and inflation in London.
Back to our 30s off the hold. So your first risk off if you are playing this low. Hold of our 0. Again, just waiting for the Russell to come down to value is literally all you need to do. $45's next if 30s become supportive. Hopefully we're catching on. This is first target at yes as well into 48s. Yep. At 1 here, looking for 45. So again, push over 45s gives us probably our full rotation. This is Russell into POC from our value low. Nice, Nick. You guys see what I'm saying? We just wait for the market to come into pivots all together, and then we trade up. Look for us to be down into our negative 500 on tick. Like we're back to our reversion zones. Same. We've got one left, Julian. Just look for 45s to become supportive, and then we could probably play it back up to 65, 60, 65. Waiting. 0 test tick. Back to our resistance on ES. Russell at resistance as well. Right. Now we're just looking for a bid to step in, high or low. 60 is our first look off. What did I see? Just saw that Russell's been leading. We saw NQ weakness, but I saw a buyer at 30s. We saw a seller at 45s on NQ. Was just waiting for Russell to come down into value for the full retest, and then looking for a bid to insight there with tick coming down into our lows for a full rotation. And then as soon as we start to see divergence,
at 1:30
and we're back into our
PM
ES lows,
we expect comments
we
from
just expect
ECB's
balance on
Decans, who gives a
FOMC.
speech on monetary
So
policy
it's just
and
worth
inflation
trying a
in
bid,
London.
playing off of our overnight low. Like, I'm not expecting the market to tank before FOMC. Like, I would just expect balance to maintain. So it's just, where's our best odds for a reaction
Israel's
where all
preparing for an
3 indices
offensive in
get a
the
lift?
north, according to the military chief.
And that's like value low, RTY. And then it's just playing off of that. Tick does not hold off. It's scuffed, dude. You gotta wait for the volatility to come back down. You're gonna get an extreme. It'll probably go to like 1700 or negative 1700 on tick, and then we wait for that to balance, right? Liquidity come back in, and then play off of it. But for like right now, tick is incredibly useful because we're in a very neutral market, being balanced, where we're just trading negative 500 to positive 500. Just very clean rotations. And then when it's just balanced on 0, like, just don't touch anything. Like, we're just going to get trend continuation from wherever the high was from that point. Yeah, FOMC days are very volatile, but they're only volatile once the news drops, right, into FOMC. Beforehand, it's incredibly easy to just trade balance on FOMC. It's why it's like one of my favorites, because I was talking about this earlier. It seems like you guys are just getting in, but like pre-FOMC, we're trading balance. Like, no one's stepping into the market to move us. Like, we will continue to trade with basically just day traders scalping a range around value, right? Any excess outside of value is going to get bought and then pushed back up onto the other side, and then excess, and then rotate back down over and over and over again. And so as long as you have that narrative in your head, we just look for local pivots across the market, and when they all kind of coming together, it gives you your best chance for that rotation back up or down, you know. But like, as soon as you expect balance, then you can trade balance with size, because you're not expecting more or less. You're expecting balance. Once FOMC comes in, right, you are out of position. You're waiting for liquidity to come back in. We get new levels based off of that FOMC candle. We mark the high, the low, the mid. Then we trade around the reactions from in trend. Do buyers care? Do we hold the 50% of the volatility candle, right? That creates a mother bar for us to play off of, where we just trade around those interactions and just play trend. But until then, like, we have our levels. Does the indicator package on TFC site come with the zones? Yeah, it comes with everything. All inclusive.
Shortly expecting comments from ECB's Decos.
So we've designed PVC specifically for days like this, where these are our reversion zones, these boxes. This is a deviation of our value. So this is our value high and value low for the period. This is our deviation away from that. We've found that on balance days, this usually results in a move back up to value from these zones. So it's just a mathematical equation, basically, that we found works statistically like pretty well on balance days. Like, this is where excess will form, and then we will revert back up. So it's a good place to start looking. And then you get a signal letting you know that there's a potential reversion, and it gives you an invalidation level, and then of course stacked as well prints. So when we get like stacked printing on all three plus reversion, it's like, okay, well, might as well give it a try with our invalidation level. Play off of it, especially when we have tick that isn't just rotating
US
zero,
State Department
but down
says
in our
Russia breached
extreme on the
global
day.
chemical weapon ban in Ukraine war.
Russell is always a good indication, just because it balances the most frequently between 2 points. So just finding when that's going to come into its low and then looking to play off of that for the overall market strength is nice. New 15s just opened. We're really looking for 45s to now stay bid, ideally. Any look below just wants to be immediately bought up. Need to get over 60, or that seller is still going to be just like sitting there at very tight range right now while we wait. ES and RTY just contesting with our PVZ POC. 52s on ES, 8480 on RTY. That's our PVZ low, value low. So that's our current resistance from the period. So value high is up at 500, POC 92, and then this is the level that we need to break back in to trade back up to this area. So 60s become our strong pivot here, where we don't look for more, becomes our profit target until we see acceptance above. So that's just the PVZ indicator. It's the value low from the period before. We need to see something like this occur, where we are able to bid and then hold, and then we can look for the rotation back up. Until then, any reversion trades should be taking profit. First profit taking is always into this level. That is how it works. It will change color when it becomes supportive. As of right now, it's red because it's resistant. There's an attempt to hold it, right? We get our bid off of it. We then attempt, we then see the look below, reoffers, and then we get continuation down. It was supportive beforehand, resistance, still proven otherwise. Pay attention as the Russell comes back up into resistance here. Top of range. Note that we only got the move because the Russell gained momentum, right? So if we lose that momentum, don't expect more, at least short term.
Наш шагающий путь, быть похожими хотят.
Counters are all over the So like I just want to highlight, like, playing off of the 30s, my last trade got stopped and then I entered again because we saw the bid in Russell. And it's like, taking small losses is just a part of trading, but understanding where we're looking and when it actually plays is incredibly important to, like, let us know, like, oh, okay, like we can now do this again, we can play this up. So like here, this is what that looked like for me. You can see, like, I'm buying my stop as support on my entry and then playing it up. Why? Because we have a narrative that we're playing off of, which is the Russell coming into the low. So like, if I try on our first attempt here, which was what, at
CP's decline says Eurozone inflation will fluctuate for the rest of 2024, then fall to 2% target in mid-2025.
I tried here first, played it up, could have taken profit, but we got our zero rejection. We got a steeper pullback on NQ than I was expecting. But it's just the Russell balancing, right? ES is balancing. Everything's holding where we need. But I'm taking too much risk here, so NQ isn't ready yet. So I need to take my risk off and wait for NQ to actually find that low, or I need to just accept that loss. So in what I ended up doing, right, is stopping out of that trade for like 130 bucks, but then getting back in, because that's important, because nothing invalidated, we just pulled back further than I wanted. So because I took a bad entry, okay, I now need to get back in and play it up. Nothing has changed narrative wise, but I do need to still take the trade. I need to be actionable. If I'm going to stop out, I still need to respect when I should be getting in. Like, that mentality is incredibly important. Of like, okay, I'm willing to take the paper cut because I know the upside potential is still there and I can make up for that loss. So who gives a shit? Again, just Russell coming into the low, stack printing, value holding, ES holding a double bottom, reversion signal, stack signal, pushing in with bullish divergence, push up, go, go, go. First profit into 45s, second profit into 6. Now we look for 75s to become supportive, or we expect the offer to hold here. I usually do not use bracket stop losses, but I recommend that you do. If you are unwilling to manage your trades manually on the DOM. I usually do not, though. I just am trading off the DOM. Immediately will stop market close if I don't see what I like. Yeah, I'm flat as well into 60. Don't expect much more. Just right back up to our resistance. It's full rotations. Now we look to see if we build above value or if we look back in for the rotation back down. Same shit. Remember,
ECB's Decos says transmission in the latest cycle is also stronger than in the past.
we need Russell and Q to maintain
And
higher
Decos
lows
says I'm
and momentum
increasingly
if we want
convinced
any
we're
more
on the
upside.
right track to reach 2% soon.
So holding previous pivots, incredibly important. Failure,
Decos says disinflationary
results in the
process
same
is
thing.
advanced but not yet complete.
Rotations back down to POC. You can attempt to play both directions, or you can just wait for us to come back down to the lows, or just if you're shorting, right, you're shorting into these highs, and you're looking for rotations back down. I usually don't play both sides, because, I don't know. I just don't care. I'm still in, like, the mentality of, like, the long from the low, so usually I don't want to play the rotation down again. Yeah, I think the short's fine. And there's really, again, like, we're rotating around value, so excess outside is... We've done the same thing over and over and over again, every attempt in it. Right? We try above value high, we then reject, push below, trade to POC, POC back down to value, look for excess below, rotate back up. Same rotation every time. You're now looking for offers to now hold as resistance on any retest if we get them. Or just look for a pushback down to 80 RTY.
Harsh silver linings of dawn surround me in a world of two-faced posses that dislike me. Differences we never cared, but now it's quite frightening. When do we stop fighting? Living in a different space, ever-changing world just keeps on circling with our lies. Hard choices encircling ourselves with regret. We were once family, now we are.
What you're really looking for here is a shorter pullback, right? A higher low with a push down into negative 500, or that to be the full correction. What I mean by that is we just did this full rotation up, right? Holding our zero, getting that secondary leg off of the zero hold into our extreme. Now we're watching for this zero ejection and then a push back down into our negative 500. We want this negative 500 to occur into our POCs, right? Into our higher lows to allow us to show that the market has now done the full relief, the full sell, and now we can look for a relief bounce. We want that relief bounce to show a supportive bid and then a recovery of a key level. And then that's like, okay, well, the market did its sell off from the highs, but we were able to maintain a higher low. Now I'm looking for buy side to be more active because we've now gotten the relief we need, and now we can see a bid step in at a higher price, and like ideally that gets us out of here. If that doesn't hold true, right, like we're just going to trade back down through balance. So we just watch our zero untick, look for that relief at our negative 500, and trade the range again. Just rotation after rotation. Again, if you are not comfortable trading balance, and this isn't the market that you thrive in, then just a reminder, you don't have to trade it. I know it's a crazy concept, but you can trade on days where we have trend and expansion. This is a great day to practice if you're not great at trading balance.
At 2 p.m. Eastern Time, we get the US interest rate decision. Forecast no change on the prior 5.5%. We also get the FOMC rate statement. Looking at some analyst notes ahead of this release, Unicredit say the Fed will very likely leave interest rates unchanged at the conclusion of its two-day meeting. We expect it to announce that it will slow the pace of quantitative tightening starting in June. Chair Powell is likely to reiterate the central bank is in no hurry to cut rates. We expect a total of 75 basis points of rate cuts this year, starting in September. And from Societe Generale, at this FOMC meeting, the market will be looking for clues for further hawkishness from Powell at the post-meeting press conference and for changes to the statement that might acknowledge sticky inflation. A slowdown in growth and a decisive shift in the disinflationary trend are throwing a wrench in the Fed's easing bias.
Exactly, Tatum. Do I size down an FOMC release? I usually do not trade initial release. I wait. I usually don't have a trade open whatsoever into news. I do not give any chance for my account to be blown or loss of a huge magnitude with volatility. I'll wait for liquidity to step back in, trade down to a level that we care about, and play it. I don't need to be in the initial candle. I'm usually, to be honest, my best trades on FOMC day are the balance before FOMC. Like, we've made already more today than Monday and Tuesday combined. Just understanding that we're just trading balance. So, like, why do I need to put more pressure on and have the potential to lose all of my morning gains by gambling? But that's just me. You know? Do what you want. Maybe you pass your Apex eval account in one candle, you know, and then lose it the next day. Right after you pay them that juicy fee to get that account started, you know. Just saying, like, I really want to like it's nice that with prop firms that you're not trading your own money, right? But like you always need to like realize like you're putting your capital on the line. And so like if you're not on a prop account, you know, your loss is what? Like on a prop account it's like $60 to $120, whatever your eval cost, and then the activation fee. But like on a real account, you have the chance of blowing up and losing it all. So is it worth the risk? I don't know. It's up to you. Like I'm gonna trade when I understand structure and when I understand what's going on, rather than trying to gamble my all of the hard work that I put in over the month on a single trade and just get rid of all of my gains, right? All of the work I've done to compound would go away in a single trade if I'm on the wrong side off of FOMC. Is that worth it to you? You know, I mean, if it is, great, but like to me, it's just not. I have a lot more at stake than a $60 activation fee. Like, yeah, you can make insane money very quickly. You can also make insane losses very quickly, right? You have to remember, you have to understand both sides.
So try to tell myself.
I'm sad that no one has posted an AI song
So in
yet.
10 minutes' time at
You guys
2 p.m.
were letting
Eastern
me
time,
down.
we get the US interest rate decision. Forecast no change on the prior 5.5%. We also get the FOMC rate statement. Looking at some more analyst notes, Morgan Stanley say we expect the FOMC to keep the Fed funds rate unchanged. Little change to the FOMC statement is expected, but we see the risk of a more hawkish press conference given Chair
Hawkish.
Powell's recent commentary on the lack of progress on inflation. The emphasis should be on remaining patient as the FOMC awaits more convincing inflation data. Wells Fargo says stubborn inflation and resilient economic activity through the first few months of the year have left the FOMC little reason to ease policy in the near term. In addition, a chorus of Fed officials, which tellingly include a number of doves, have indicated that there is no hurry to cut rates at this time.
This dude talks so much on these days, so just be aware. Yeah, I mean, I honestly, Nick, like, most people should just be invested in like S&P 500. Like, when you talk to like hedge fund managers and like people who actually work, and like 90% of them have most of their capital just invested in like 5 ETFs. There's a really great interview. I'll try to find it with this guy who does like he's like works at one of the biggest quant firms in the world, and they like are doing all these insane algos and doing all this other stuff. And then they were like asking about his personal account. It's just like I've got it invested in Voo. Like, oh, okay, well, says it all. Because like day trading works until you get to a certain size. And like these like scalps and like being like a retail trader, we can take advantage of like the rotations on the smaller time frame, right? With smaller size. But like a lot of these strategies do not scale well with major size. And when you're like actually have real capital, you're affecting the market. And so like you need to be aware of that, and like it's better to just keep your capital invested, right? And long term you're just like gaining from S&P 500. Like it's just not worth to try to like day trade with like $1 million. Like, what are you doing? Let it be. You know, 1K, 10K, 50K, like you can do a lot with that day trading wise, but anything more, just invest it. For prop firms, aren't they just copy trading you? I think a lot of them are. They take like the best traders and then just have like an internal account that they're making money off of. I think that's been shown. I mean, like 95% of actual prop accounts aren't even trading the live market. Like even when you're funded, 90% of the time you're not trading real money. You have zero effect on the market. There are specific players that do get funded accounts, right? Like if you're very good, they will give you a real money account. But like 90% of the prop user base is not in that. They're in a simulated market environment. Top step, Apex, they're all the same.
Interest rate decision.
I think the only one that
Forecast
actually
no change
gives
on the
you
prior 5.5%.
a real money
You also get the
account is
FOMC
Trade
rate
Day,
statement.
like off bat. But their evaluation process is way more strict. And like if you fail an account through Trade Day and you like it shows that you were YOLOing, they will not give you another account. They will say, sorry, you are not allowed to use our service anymore because you're not the person that we are trying to attract. Like if you show that you're YOLOing on days like today and you lose it all and you try to apply for another funded account, they will say, no, we do not want your money. Because they're giving you their money, actually. Top Steps XFA contract labels you as a research analyst that gets rewards for showing their work. A lawyer somewhere. Yeah, exactly. It's a very strange business model, but it works. And it allows retail to get good without risking their entire life savings. Trade Day is like one of the stricter services, but it also has the best best policy for taking money out. Like you can just take money out whenever. Doesn't matter. Because it's real. They're like if you're funded, you're funded. Like you just take money out. They actually have a really big sale going on right now that Tom just mentioned. There's no activation fee and they're 40% off right now. It's a pretty solid deal. Because like that's how Apex gets you. They're like, look, it's 99% off, but then it's like, okay, actually it's still $40 for just to trade in a paper account. And then there's like what, like $120 activation fee to even take that account to live. Something like that. So really like all you're doing is just getting a cheaper paper. You're still having to pay the full activation fee, and then there's still like the sleazy you have to be green for X amount of days before you can actually take a payout, and then that payout is limited to a certain amount of size. Which is fine for people who are like actively have a process already, right? And are like can get funded no issue. But for those that are still like in the learning aspect of it, it's going to be like, okay, I got funded and now I'm gonna lose it before I can actually take a payout. Like it's rough. EPT? What's that one, Julian? ET prop. Oh, Take Profit Trader. Yeah, I've heard good things about them.
I've been using Elite Trader funding lately, and I've been really enjoying it.
That's the one that allows you to swing as well, right? Or with like a certain account type.
You have to actually sign up for a swing account, but yes, you can swing. I took a payout and I got paid within, after I set it up, I got paid within hours. It's instant, and you could get paid in crypto if you want to.
That's cool.
So I actually took the crypto payout because it was instant, where if like the bank transfer was up to 1 to 3 days, you know?
Yeah.
So I just put it to my Coinbase USDC, no fees, took out, boom, got it within like minutes, literally.
Easy.
Top Step's payout process is pretty good too.
Yeah, by far one of the better ones.
I would put ETF up there with Top Step. I think Top Step has, a little bit more resources, and their website and all that platform is a little bit better. Each of them have their own ups and downs, but ETF has the end of the day drawdown, so you don't have that intraday trailing drawdown that Apex has that gets you. Oh, that thing is the worst. But
10 seconds.
I'm gonna let the guy talk now.
You ever found a reason to use trade copier across multiple companies? I think it would work for what Tom does.
No change. Rate remains unchanged at 5.5% as expected. Federal Reserve.
Look at the liquidity dry up on Dom, by the way.
Redemption cap
Like,
at
what are we doing?
$35 billion per month, and will reinvest
I do use the trade copier across companies,
payments
by the way,
into
sometimes.
treasuries. The Fed will slow the decline of balance sheet by cutting treasury redemption cap to $25 billion per month from $60 billion starting in June 1st. The Fed will slow the decline of balance sheet and Fed says economic activity continues to expand at solid pace. The job gains have remained strong. Unemployment rate has remained low. Fed says risks to achieving employment and inflation goals have moved toward better balance over the past year, as opposed to are moving into better balance in the March policy statement. Fed does not expect there will be appropriate cut rates until it has gained greater confidence inflation is moving sustainably toward 2%. Fed says inflation has eased over the past year but remains elevated. The vote in favor of policy was unanimous. US short-term interest rate futures contracts rise after Fed releases the May 1st FOMC statement. US stocks gain some ground. S&P 500 last down 0.1%, pairing its losses. US Treasury yields trim losses after Fed. 10-year yield last down 3.5 basis points at 4.642%.
All right. Initial reaction done. We just retraced the full candle. Bid still stepping in there at the low of the candle. Good sign. Watching our halfway back now. Need to see a push over 90s on NQ.
Most likely in November.
You see how we're holding the halfway of our volatility candle now as resistance? So we need to see a push over 58, 59, basically, and a bid to step in, or this will continue to hold as res. I'm just going to mark our 50% here. Delete this. gonna go to a smaller time frame. Retest our highs now. Russell leading.
The Dixie dropped after the FOMC statement, currently down 0.22% on the session.
Purple ties, that's the lead. That's the lead lag signal. Good to know.
Oil futures also extending losses. US crude prices down by $3 a barrel.
Holding value is a good sign. We want to see 56 hold, and then I'll look over 63s for upside on ES. Going to our higher time frame chart, just going to show where we are. We are here. We want to see the ability to get back over a previous month low.
So traders see a smaller chance of no Fed rate cut this year after the FOMC meeting.
63s, key level.
US Treasury yields now extending full 10-year yield, last at 4.632%, down 5.6 basis points.
There's the mega candles. JPOW I'll talk, and then we go for whatever direction after that. Did a pretty tame reaction, to be honest. I mean, we just held value. Pushed up to ETH highs, rejected, and then came back down to retest value. Looking for our break now. See if we can get it. ETH high and Q here. Same with ES. See if we can hold our overnight highs. Get a move. Watching our 510 on NQ specifically, seeing if a bid can hold there. It's our 30-second opening range high.
Last down 6.1 basis points at
Furthest pullback would be here at
4.985%.
98, and then a bid back over 510 is what we're looking for. Understand, like, we're just trading our 30-second opening range here on the day. Yes, sorry, Russell pullback down at 88.70 here, off of our new PBZ that just opened. Keep an eye on these levels. We want to see bids basically just interact here. Actually going to turn off our levels just to play around this. Either we hold value or we rotate through value. Watching 510 again. The major pivot before. Liquidity is still pretty dry, but it's starting to come back. Our volume profile so left up. Still battling with this 510 seller on NQ. Value high is still holding as supportive though. Just continuing to look for bids as into our PVC value high and our actual value high. I think we'll probably get a decent amount of move when we actually see our overnight highs become supportive. Until then, right, we're just trapped between the 63 and 56. Again, going back to our higher time frame, this is our main resistance here. Sellers want to keep us below the 63, 56. We want to see an offer below for rotations back down. As long as 56 is kind of maintaining, we look for 63, 66 to kind of build and become supportive, and then we can get upside. You just have the move being digested right now. Back to our 510 off of a value high hold, immediate rejection, right? We have a very clear seller at 510 still. Just looking for bids to be able to continue to step in at this 87. Looks below and then a hold of the offer. Bad news. We'll probably trade back down to that FOMC low. Watching ES reaction here into value high. Russell coming down into ETH high and value high is probably going to be our trigger for direction, if I had to guess. Just keeping an eye across the board. Like, we're still trying to maintain these value highs on ES and NQ. Russell just a bit sideways. As soon as that figures out what it wants to do, I think I'll probably pull the trigger. Our value test on RTY. See if bids step in here. Pretty important if we want to hold this edge, or it's going to rotate back down. This edge, incredibly important. These bids to show decent amount of aggressivity. Get us back over value. Or range rotations back down to the low of this PVC node just makes sense to me.
Woke up late on a Sunday, no plans for the day. Grabbed my whole guitar, started strumming away.
Our re-offer a value here from the inside. This rejects, then we expect the full rotation down. If it can bid above and show supportive, then we can look for more upside off of the failure from sell side. 8750 on NQ. Looking for that Russell bid at ETH high. Need to see us over 90. Yeah, 2:30. So 17 minutes. And then we get another move. Basically just price processing our volatility right now. Liquidity coming back in, now showing direction. Just filling in some of the structure from basically lack of liquidity that pushed us up, showing that we are willing to hold the lows, right? And now balanced in between. Can you tell that all these songs are AI that I'm playing? Or do you think that they're just like low tier artists that are it's not relevant? Like, can you tell that this voice is AI? Yeah, it's on YouTube. The entire song was just intense. Instruments, music, voice. Some choice words. Imagine. Huge. We probably rotate until JPOW starts, to be honest. But holding value is a good sign across the board. As long as the Russell is able to maintain up here, I think the market is going. Just gonna take a little bit. Our main level here is 80s. So all the liquidity on NQ. This is taken and then becomes offer and the seller stacks there. Then we expect down. If 80s maintains and we're able to push back over 500 and make 510 supportive, we go up. Just really tight range trading around this node right now, right? We are making lower highs. We are within value. You need to see a breach above value if you want upside, or we are going to get this slow drag just down, back down to the spacing. Again, as long as the Russell's holding this node, I'm not incredibly bearish, but we don't have what we need yet for upside to actually thing other than just trading back up to the top of our range. If that makes sense. I don't think taking 2 trades is bad. You can trade here, you just have to be careful. Tight stops. Like trading the edges at our value is not bad. Just know that like if you're wrong, you're gonna be really wrong really quickly.
At 2:30 p.m. Eastern Time, we get the FOMC press conference with Chair Powell.
Oh, the boys are filling it in right now. Just got this in a DM. Painting the outline that they just put on the wall. Do the fill right now. Regs, R-E-G-S. You don't see it? It's too low. I'll draw the letter. Paste. R E G S. Visible now? All these boomers in chat, man. Come on. You see an eye. I expect at least 5 AI songs after this day is over. I'm gonna do a full AI playlist. I expect you guys to.
At 2:30 p.m.
Participate.
Eastern Time, we get the FOMC press conference with Chair Powell.
To see what the future is. For my non-boomers, how do you guys feel about the Kendrick diss track, Euphoria? Mid. Wow. I asked you how you felt about Euphoria, Kendrick's retort to Drake. I'm Team Drake. Yikes. Can't believe we have 2 Drake fanboys in the chat. Upsetting, to be honest. Yeah, actually, ChatGPT and 20 Ghostwriters. He shouted out Taylor Garoto, bud. Please, man. Holy.
S&P 500 turns positive ahead of Powell's conference, last up 0.1%.
Thank you, Rum. Holy, an actual take. Straight upside since our test of our value on Russell. Again, that's all we needed for upside hold. New high. If you are in a trade, please move stops up. Just understand JPow's going to start talking, market liquidity is going to dry up again, and then we will be trading off of every sentence that JPow speaks. So volatility steps back in. You can already see liquidity drying up again. Like 1 to 5 lots for each price point. This is your chance, 1 lot warriors. You can affect the market here.
Shortly expecting comments from Fed's Powell.
Like, this doesn't sound like AI to me at all. Like, this is like a demo from like Oliver Tree or something. Just, it sounds like a demo, like an actual song. Crazy. I expect at least like half this uptrend to get retraced. Probably ETH highs when JPOW starts talking. They're just taking advantage of the dread liquidity, pushing price up. Careful. I'll actually put JPOW on. You guys want the link? Is you can watch him get annoyed by all the reporter questions.
Last night, can't stop smiling, thinking about you.
Peace, Kevin. Good rest of your day. Purple tie, bullish.
Fed's Powell says the economy has made considerable progress.
There's
towards
your
dual
pullback.
goals.
I remain squarely focused on our dual mandate to
Watch our ETH highs here, see if there's anything.
And Fed's Powell says inflation has eased substantially over the past year, but it's still too high.
Inflation has eased substantially over the past year, while the labor market has remained strong.
Fed's Powell says further progress on inflation is not assured and the path is uncertain.
Further progress in bringing it down is not assured, and the path forward is uncertain.
Wish I had the connection this guy has.
Returning inflation to
Our financial juice guys from the future.
Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged.
Fed's Powell says restrictive stance has put downward pressure on inflation and the economy.
A restrictive stance of monetary policy
he's from the future.
Fed's Powell says risks to achieving the dual goals have moved into better balance over the past year. Powell says, but inflation has shown lack of progress. Powell says we are highly attentive to inflation risks.
There's your full retrace of that little move up from the lack of liquidity that was being taken advantage of. Just watch our value highs on NQ and ES. So far rejecting. Really important that the Russell finds a low here and recovers ETH high and can get back over our 90. If this is resistance, right, we're going to look for that move down back to our value low,
Fed's Powell
Russell,
says
before we get
domestic final purchases was as strong as the second half of last year,
was 3.1% in the first quarter,
saying that it is an important underlying signal for demand.
Consumer spending has been robust over the past several
Powell
quarters.
says the labor market remains relatively tight.
On housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter.
We're battling with that 510 level again. If we can show it as supportive here, I think we can probably retrace this at least. Let's watch our ETH
Fed's
highs.
Powell says nominal wage growth has eased.
This is
over the
Russell
past
value
year,
high retest as resistance.
but labor
Need to see
demand
it become
still
supportive.
exceeds supply.
25 to 54 years, and a continued strong pace of immigration. Nominal wage growth.
ECB's DeCoz says the ECB has gained confidence in its forecasts after latest inflation data.
The supply of available workers. Inflation has eased notably over the past year, but remains above our longer run goal of 2%.
Fed's Powell says inflation data received this year have been higher than expected.
Excluding the volatile food and energy categories, rose 2.8%. The inflation data received so far this year have been higher than expected.
Retest of our highs.
Short-term inflation expectations have increased in recent months. Longer-term inflation expectations appear to remain well anchored.
Again, for upside, I'd really like to see ETH high on ES and
Fed's
Q
power
hold.
says longer term
Russell
inflation
needs to continue.
expectations remain well anchored though.
Russell has been our leading indicator to let us know if we're going up or down. As soon as that finds a bottom, we push.
And stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of
And Powell
essentials.
adds that monetary policy actions are guided by the dual mandate.
We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our
Powell says
securities
risks to achieving goals have moved towards better balance, he repeats.
over the past year, as labor market tightness has eased and inflation has declined.
Powell does add economic outlook is uncertain.
Goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks.
Fed's Powell says we do not expect it will be appropriate to cut rates until we have greater confidence that inflation's going back to 2%. So again, Powell says do not expect it will be appropriate to cut rates until we have greater confidence that inflation's going back to 2%. So far this year, inflation readings have not given us greater confidence. So again, Powell saying do not have confidence on inflation data this year. Likely gaining greater confidence will take longer than previously expected.
It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market.
Unexpected.
Powell says reducing policy too soon or too much or too late or too little both have risks.
Progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment.
Policies is well positioned to deal with risks and uncertainties, Powell adds.
Carefully assess incoming data, the evolving outlook, and the balance of risks.
Adds that we'll make decisions meeting by meeting.
Deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions.
All of our PVZ values again. No change, just holding this range. Retesting our highs.
At today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the
Yeah, this is like one of those days where we actually are getting our money's worth by having live news. It's ahead of the YouTube stream.
Let's just repeat that comment from Powell as he said that gaining confidence to cut will take longer than previously thought. Powell adds that slowing the pace of quantitative tightening does not mean our balance sheet will shrink less than it would otherwise.
The decision to slow the pace of runoff does not mean
Adds that slowing the pace of runoff will ensure a smooth transition for money markets. Decision to slow runoff will reduce the possibility of money market stress.
Slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress, and thereby facilitating the ongoing decline in our securities holdings that are consistent with
Solid holds of our ETH highs this attempt is not bad. Testing our highs now again, seeing if the seller is still relevant. Speaking hard. NQ new high, ES new high. Russell still battling with its high.
And stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and
Powell says the total portfolio runoff will be about $40 billion per month.
public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Wait, here they come.
Powell says the policy rate is restrictive. I do think policy is restrictive and weighing on demand.
Consider the current policy rate still, you're confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is.
Powell says labour demand still strong, but it has cooled.
A few places I would point to for that. You can start with
Says I saw evidence of that today in the jobs report.
Demand is still strong. The labor market in particular. But it's cooled from its extremely high level of a couple of years ago, and you see that in job
Powell
openings.
says quits and hiring rates have normalized.
The JOLTS report, as you'll know, it's still higher than pre-pandemic, but it has been coming down both in the Indeed report.
As Powell speaks, S&P 500 extending gains up 0.5% now.
Same is true of quits.
Watching this 0450 pivot, RTY. Love to see this bid.
Surveys of workers and surveys of workers and businesses, and ask workers, are jobs plentiful, and ask businesses, are workers plentiful? Is it easy to find?
Powell says it is clear that policy is restrictive.
We are into our next target here off the hold of 63.
You also see
Back to our
Again, US
previous
stocks
balance.
gaining ground as Powell speaks during the
87s.
presser here.
you also see that higher interest rates are weighing on those.
Powell says we believe it will be over time sufficiently restrictive. So again, Fed's Powell says I believe over time it will be sufficiently restrictive.
I would say that we believe it is restrictive.
So again, that's Powell.
We want to
saying
be able to
believe
build a
over
flag
time
here.
Policy is
Get
sufficiently
back into this
restrictive
previous
to bring
balance.
inflation back to 2%.
So as a follow-up, if inflation
Right, so we want to see price be able to develop here.
as it has
Get back in this 87.50 and trade back up into this 93.98.
low and expectations are
This is a retest of our seller before this downside move.
that for
Expectations are not anchored.
are anchored stable roughly.
We understand that this is where
For the last half
we need
point
to
PC.
be able to build above. We went up. We have a node here, right? Can we hold this edge now to trade up through this node? It's the question.
For as long as is appropriate, and we'll do that.
Testing through our node now.
Thanks for taking our questions, Chair Powell. I wonder, obviously, Michelle Bowman has been saying that there is a risk that rates may need to increase further. although
Powell
it's not
says it's
increased that
unlikely the
low.
next policy
I wonder
rate
if you
move
see
will be
that
a
as
hike.
risk as well, and if so, what change in conditions would merit considering raising rates at this point?
Powell says we are focused on how
At our
long
next
to keep
resistance
policy
here,
restrictive.
98, 93. Love to see us build here for that push back up to 104.50, 109. So really want to see this 93 hold ideally. Again, like the whole idea here, zoom out a bit.
Powell
We
says
want-
to hike rates, we'd have to see
this is our
evidence that
node.
policy isn't sufficient to
Can
bring
we now
inflation
build
back to our goals.
on this tail end of or push up?
That's something like that is what it would take.
We understand that the low of this tail is down at 87. So a failure at our 93s should result in a retest down. And we look for rotations from there. 98's big test.
Just noting Brent crude futures settle at $83.44 a barrel, being down $2.83 or 3.35%.
Weren't tight enough to achieve that. So it would be the totality of all the things we'd be looking at. It could be expectations, it could be a combination of things. But if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Testing our 98s now.
At Associated Press, you didn't mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate to cut rates later this year, as you have at previous press conferences. So, has the Fed sort of dropped its easing bias? Where are you standing on that?
So on, let me address cuts. So obviously, our decisions that we make on our policy rate are going to depend on the incoming data, how the outlook is evolving.
Powell says we think policy is well positioned to address different paths the economy might take.
I think, and we think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did,
Russell's seeing some divergence here, stepping down first.
Powell says if inflation proves more
98
persistent
still
and the
attempting to
labour
hold
market
on
remains
ES,
strong,
waiting
then
for the
it could
Russell
be
to bottom
appropriate to
before
hold
we get our
off
next
on
leg.
rate cuts.
greater confidence, well, that would be a case in which it could be appropriate to hold.
Do you guys want me to keep this higher time frame chart on with all of our levels, or do you want me to go back to the 3 pane? 98's still holding. I'm trying to keep up with you guys, but I don't know what's more beneficial.
That we do gain greater confidence, as we've said.
Pushing into our next target off the hold of our 98s, 104.50 to 109.
So Powell says
Over
that our
109,
passage would
we
point to rate
can
cuts,
trade
and
up
that
to
would be if we
15s
gain
again.
greater confidence and unexpected weakening in the labour market.
Cutting rates. So I think it really will depend on the data. In terms of peak rate, you know, I think really it's the same question. I think the data will have to answer.
Scroll with the Dom.
Well, and could you just follow on the path where you might not cut? Is that you mentioned that it would be inflation persistent? I mean, is inflation with
Big size being placed on 105s here.
Could you expand a bit more?
Trying to hold us now on this push above.
Again, we've set ourselves a test that for us
Pushing in the next target here, 109. This is our resistance.
confident that inflation is moving.
If we push over, I really do think we go for 15. It's just the same logic as before, where this is a node. This is the top of our node. This is the low of our node.
Basis points on the day now as Powell discusses rates.
Inflation data would be at the very heart of that decision.
Pushing into 15s. See if 109 can rebid.
Nick Timrose of the Wall Street Journal. Chair Powell, to what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained tighter financial conditions will be needed to
that 105 liquidity is still sitting there. See if it gets taken or pulled. They're trying to defend this orange.
Know that. I think we'll be able to look back, you know, from down
Russell new high.
back and understand it better. You know, if you
Pivot above is 21s on the Russell.
Let's look at growth. Really, what we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an acceleration in growth. I mean, the thought would be that financial conditions loosen in December, and that caused an uptick in activity, and that caused inflation. Presumably, that's what we're tightening in the labor market. You don't really see that happening. What you see is economic activity.
Russell new high, pushing into our 21s now.
Powell says there's not an
Seller
obvious
found.
connection between easing in financial
You see a lift
conditions
above
and
for a trade
inflation.
to 24s.
Over time, I don't know that there's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and you know that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth would
Short-term interest rate futures rising as Chair Powell speaks.
I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was reaccelerating?
So I just want to be careful that we don't target wage growth or the labor market.
Russell,
and
21's holding.
We saw last year, very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here.
Watching our edge here.
The pandemic-related supply side distortions and demand side distortions.
You really want like this 100, 101 area to stay bid, ideally. Any look up below needs to be bought almost instantly. Not a ton of size other than that. Below 100s until we get back down to 90s.
At this point on further things happening on the supply side, either because we do see that that companies still report that there are supply side issues that they're facing, and also even when the supply side issues are solved, it should take some time for that to affect economic activity and ultimately inflation. So there are still those things. So I don't like to say that either strong, either growth or...
Powell says, I wouldn't rule out that we could still have strong growth or labour markets and inflation continuing to fall.
Inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else like to see.
And Powell repeats, unlikely that the
Russell's
next
still
move will be a
lagging,
hike.
so just be careful here. The bid at our 98, 100 area is held. We need to see the push over 109s here with like a decent amount of aggressivity, or this will be our resistance. This is just a node rotation, guys.
Powell says we'll
Again,
probably have to see wage growth ease to more
our node.
sustainable levels to reach our inflation goal.
Move down incrementally toward levels that are more sustainable.
Traders' price in September is likely timing for the first rate cut from November before Powell started speaking.
Those 400 buckaroos from 100 back up to 109.
It's May now. Do you have time this year to cut 3 times, just given
21 still our resistance on the Russell.
I'm really thinking of it that way. What we said is that we need to be more confident, and we've said.
Powell, when asked about 3 rate cuts this year, says only that the Fed needs to be more confident on inflation, and we didn't see that progress in Q1. I don't know how long it will take before we can cut rates.
Then that it's going to take longer for us to reach that point of confidence. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope, and I don't know exactly when that will be.
And with hindsight, are there any signs that you can look back on now, looking at
He
the
said,
reports
with
from
hindsight.
January or February or March, that suggested something more worrying than just expected bumpiness?
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings.
Back to our 21s on Russell. See if we get the lift above or if this still holds.
From 3 worse than expected inflation readings.
React to 1 or 2 months data, but this is a full quarter, and I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence.
Powell says the signal that we are taking is that it will take longer to get on a sustainable path to 2% inflation.
Steve Leishman, CNBC, if I could follow up on that. What particular areas were sort of temporary or blips in the inflation data in the first quarter? And what's the dynamic by which you expect them to work out in the
Do we see the rotation? I want to make sure like we're all on the same page. Like, do we see this as our node? Now we want to build here. That allows us more upside. If we can hold the tail, right? We want to see this now be buy side. We just rotated from the low of this node, right? Showing that this auction is relevant. Back up to the high. Okay.
Powell says since December, higher goods and
So I'm like, if
housing
I'm talking out of my
inflation
ass to you and you don't understand, like, it's not helpful. We want to now see buyers willing to
Powell says
defend
my
this high
expectation is
end
we will see
of the
inflation
node.
move back down this year.
We understand that 15 to 25 is our main resistance.
But adds that my confidence in inflation moving back down is lower than before.
See inflation move back down. That's my forecast.
We're looking for that hold to 21s now. Bid is attempting on Russell.
Than it was because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to expect, that housing services inflation, given where market rents are, those will show up in measured housing services inflation over time. We believe that it will. It looks like that there are.
Powell says it looks like substantial lags in when the lower market rents will turn up in the data. So again, that's Powell talking on housing rent costs. Says it looks like there are substantial lags in when lower market rents will turn up in the data.
Is there a bit of a contradiction in the idea that you are reducing quantitative tightening, which is sort of an easing, while you're holding rates steady at a restrictive rate to try to slow and cool the economy and inflation? Thank you.
I wouldn't say that, no. I mean, the active tool of monetary policy is, of course, interest rates, and this is a long.
U.S. stocks extending gains. That's the S&P now up 1%.
Really not
Big 1%.
To provide accommodation to the economy, but
We did the 21 to 24 trade on RTY. Now looking to be able to build here. See if 24s can be supportive on the Russell.
shrinking the balance sheet down to where we want to get it is a
You've got liquidity flashing here. They're trying to hold it.
with
Seller trying to step in. We were still dependent on RTY here. No change on ES, still building out this node, just seeing if we can hold. 15's hit, and then
Powell
immediate
again,
rejection.
less confident than before that this year's inflation will ease.
Has the probability in your mind of no cuts this year increased or stayed the same? That's the first question. Second question. Chair Powell, you joined the board in 2012, and I'm sure you remember, as I do, what the jobless recovery was like. Lawyers, accountants, all kinds of highly qualified people who couldn't get jobs. And given your history there, I wonder if there's an argument for being more patient with inflation here. We have strong productivity growth. That's helping wages go up. We have good employment. And so it seems to me there's a lot of hysteria about
Traders
inflation.
reduce bets that the
agree,
Fed
it's
will
something
not
that
cut
nobody
rates at
likes
all
it.
this year and add to bets
But
that the
is there an
first cut
argument for
comes in
being patient
September.
and working with the economic cycle to get it down over time? Thank you.
So on your first question, I don't have a probability estimate for you, but all I can say is that, you know, we've said that we didn't think it'd be appropriate to cut until we were more confident that inflation was moving sustainably at 2%. We didn't get our confidence in that didn't increase in the first quarter, and in fact, what really happened was we came to the view that it will take
Elsewhere now,
longer to get that
geopolitically,
confidence.
Israel's military chief of staff says the offensive operation in Gaza will continue with strength.
Brother.
To predict its path, but there are paths to.
And Powell just clarifies that there are paths to not cutting and paths to cutting. That all depend on the data.
Employment mandate. To your point, if you go back a couple
Alerting
of years,
Aussie dollar to the dollar climbing 1% session highs as the Fed speak now as well.
Says that when you look at the two mandate goals, and if one of them's further away from goal than the other, then you focus on that one. It actually it's the time to get back there times the times how far it is from the goal, and that was clearly inflation. So our focus was very much on inflation, and this is what we referred to in the statement as inflation.
Powell says as inflation has come down to below 3%, the Fed's employment goal comes back into focus.
It's become we're now focusing the other goal, the employment goal, now comes back.
The Treasury 2 to 10-year yield falling 10 basis points on the day now.
And that's how we think about that.
A dollar extending declines down over 0.5% now.
It's gonna take a lot to get us over 15.
Opportunity to ask the questions. Just to go back to the answer before the previous one, it seemed to suggest that you think the likeliest path of inflation is one that's going to allow you to have a situation where rates are lower at the end of the year than they are right now. It'd be good if you could just confirm whether or not that's a correct reading. And the Q1 GDP print has led to some to start mentioning the term stagflation with respect to the US economy. Do you or anyone else on the FOMC think this is now a risk? Thank you.
Yeah,
That was such a bearish question.
dealing really in likelihoods. I think there are
UK sabotaging us, man.
economy can take that would involve cuts in their paths that wouldn't, and I don't have great confidence in which of those paths. I think I would say my personal forecast is that we will begin to see
Powell says I don't have great confidence either way on whether there will be rate cuts this year.
I think we're going to have to let the data lead
So
us
that's Powell saying I don't know if inflation will fall enough or won't fall enough to merit rate cuts.
I guess I would say I was around for stagflation, and it was 10% unemployment. It was high single digits inflation. Right now we have and very slow growth. So right now we have 3% growth, which is pretty solid growth, I would say, by any measure, and we have inflation running under 3%. So
Russell testing new high here into 27. Love to see like 24s now stay bed, ideally, if we're gonna get more.
I would say most forecasts
Still battling with this 15 on ES.
Powell
No
says I don't
change.
really understand where talks on stagflation scenarios are coming from, given
Testing
the US
24s
data.
now.
Says we will return inflation to 2%.
and would come down, but that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth. And of course, with inflation, we will return inflation to 2%, and that won't be. So I don't see the stag or the inflation actually.
Michael McKee from Bloomberg Radio and Television. The vice chair of the FOMC said recently that he's willing to consider the idea that potential growth has moved up, and of course he's Mr. Potential Growth, our star. Do you share that view, and would that imply that maybe policy isn't tight enough?
I think I would take that question this way. We saw a year of very high productivity growth in 2023, and we saw a year of, I think, negative productivity growth in 2022. So
Powell says I don't see stagflation regarding growth or inflation.
the data. The question
and says, I don't know if productivity will run persistently above trend.
Productivity to run, persistently above its longer run trend. I don't think we know that. In terms of potential output, though, if that's a separate question. We've had what amounts to a significant increase in the potential output of the economy. That's not about productivity. It was about having more labor, frankly, both through in 2023, both through participation, also through immigration. So
Power says we saw a year of high productivity growth last year.
our arms around what that means for potential output this year and next year and last year for that matter too. So I think in that case, I think you really do have a significant increase in potential output.
I'm glad that you're getting it.
Power says could have
I
significant.
try to
increase
mention
in
levels that I'm
potential
watching on the
economic
thumb as
output.
well, so that you can then pay attention
Hence
to it. I
economic
think it's
output,
helpful,
Excuse me. So
but
Power says we could have
you guys could tell me I'm
significant increase in
wrong.
potential economic output.
Maybe that you get more supply than you get demand at the beginning.
I feel like if you're actually following what I'm saying and you're like watching it, then it makes a lot more sense.
Well, you said earlier that at this point you're not really considering rate increase.
24 bid and hold was really solid for us, testing over
Power
27s
says we
now,
believe
seeing
our
if the
policy
seller's
stance is in
gone.
a good place.
We have now pushed off the into our next target, 2150.25 on ES, main resistance, like actually main resistance. Need to look above this. This is key to get back into this previous balance above us. Key. Our next major level above is this 45. You've got some smaller pivots, but again, with the node, right? This is our next node. The question is, does this edge hold and prove as our resistance to come back down, right? Holding 15s now, or can we breach and rotate up to the top edge of this node into our 45, right? Like that's the question. This is what we mean when we say we're trading previous balance. Does this node above hold us? Can we rotate into this bottom edge at 25s and make it supportive? If so, we can then look up into the high edge of the node, which is into this 40-45.
Power says we are not satisfied with 3% inflation.
And are you satisfied with 3% inflation for the rest of the year?
Well, of course, we're not satisfied with 3% inflation. 3% can't be in a sentence with satisfied. So we will return inflation to 2% over time, but over time. And we think our policy stance is appropriate to do that. So if we were to conclude...
Yes, definitely, I agree with you. 100% decision point here.
Inflation sustainably down at 2%, then that would be what it would take for us to want to increase rates. We don't see that. We don't see evidence for that.
Russell's still pushing.
That's where we are.
Got liquidity present at 32s and 34.7 above on Russell. Those are my next two pivots if we're going to continue these higher lows. Again, with just how I explained our ES node above, right? Like we want to see acceptance here. We are trying for it, right? We need to see that acceptance over 25s and retest for that push up into 40-45. This is our main
Power
pivot.
says restrictive monetary policy needs more time to do its job.
You see how this node is developed out and we created all of this structure here outside of it? That is what we're looking for, right? It's the same shit. This was our node hold. We then saw structure build and then we were able to push off of that once this was filled. Big. To do a very similar thing now to get back into this structure.
You've talked about your commitment to being apolitical and nonpartisan, and I was just wondering, given that it's an election year, is the bar for rate changes higher close to an election? And similarly, is there a significant economic difference between,
Look for bids into 15s, just like we were talking about off the failure at 25s.
So we're always going to do what we think the right thing for the economy is when we come to that consensus view that it's the right thing to do for the economy. That's our record.
Russell's still falling, coming back down to our structure. No real liquidity present here, but this is where the buyer was last. I feel like we want to hold 2240 on as long as like this 22 to 21 holds, I think we can have continued upside. Testing now as we come down into
Power
it.
says we are at peace, that we will do what we think is right when we think it's right.
What a sentence.
We'll all do that, and that's how everybody around here thinks. So I can't say it enough that we just don't go down that road. If you go down that road road, where do you stop? And we're not on that road. We're on the road where we're serving all the American people and making our decisions based on the data and how those data affect the outlook and the balance of risks.
And then is there a significant difference?
Reoffering 24s here on Russell.
Whether you start in, say,
15's held on ES. Now looking to see if we can bid or if this will be all lower high.
Institution that takes into account all sorts of political events and one that doesn't. That's where the significant difference is. And you know, we just don't do that. I mean, you can go back and read the transcripts for every. This is my fourth presidential election here. Read all the transcripts and see if anybody mentions in any way.
NQ has the most to lose here.
It just isn't part of our thinking. It's not what we're hired to do. If we start down that road, I don't know how you stop. So.
Thank you, Chair Powell.
The way I see this is basically like this bid holds like this 13 to 15 area, right? Any look below 15 we want to see being bought here, or a rotation back down to like 101, 105 makes a lot of sense. Like this bid needs to hold here, or like this dip is going to dip into this ledge, and we need to see a buyer interact here and then purchase off. That's like your blind line in the sand, I think.
Essentially, all wage measures have come down.
We come into like, again, like 101, 100 to like 105 is where we're looking for buy side to be present. This is NQ now coming back down to where we need it, the 710.
Powell says we've seen pretty consistent progress.
Russell's
on
still
slowing
falling,
wage
just keep
growth,
that in
but it is
mind. We're back
bumpy.
below 21s.
Come down, and essentially it was flat year over year. You know, I think roughly. So, yeah, I mean, it's that part of it is bumpy, and again, we don't target wage increases. But
21 reoffer here.
In the
Nice little lift above.
If you have
Back to 24s. 21 to 24s still just our main pivot on RTY.
then productivity would warrant.
Powell says that if wages are running higher than productivity, that would warrant, that would boost inflation.
Prices over time, if that's the case. So
Questions are getting a little iffy.
inconsistent, but we have seen a substantial
Back to our 15. See if offer holds. We want to see a higher low on the Russell develop here. Hold of 21s, lift over 24s if you want upside, I think.
Consumers are feeling the weight of interest rates right now. Mortgage rates are up, as are rates for car loans, credit cards. People looking to borrow are very discouraged. That's reflected in their views.
I'm actually going to put a Russell chart on. So I'm sorry.
Well, the thing that hurts everybody, and particularly people in the lower income brackets, is inflation. If you're a person who's living paycheck to paycheck, and suddenly all the things you buy, the fundamentals of life, go up in price, you are in trouble right away. And so with those people in mind in particular, what we're doing is we're using our tools to bring down inflation.
Powell says it will take some time to bring inflation down to 2%, but we will succeed. We've made quite a lot of progress on inflation.
And we know that it's painful and inconvenient, but the dividends will be paid will be very large, and everyone will share in those dividends. And we've made quite a lot of progress if you can think about it. Headline core PCE peaked at 5.8. Now it's at headline peaked at 7.1. Now it's at 2.7. Don't want to get that wrong.
No, you don't. Quick follow-up. Are current interest rates really doing that much, though, to fight inflation right now for those consumers?
Yes, I mean, I think that restrictive monetary policy is doing what it's supposed to do, and but it's also in this case unusually working alongside and with the healing of the supply side. That was different this time was that a big part of the source of the inflation and the reason why we're having this conversation is that we had this supply side kind of collapse with shortages and bottlenecks and all that kind of thing. And this was to do with the shutting down and reopening of the economy and other things that really raised demand. So many factors did that. So I think now you see those two things working together, the reversal of those supply and demand distortions from the pandemic and the response to it.
Powell says restrictive monetary policy is working with the supply side.
Inflation. inflation, and we've made a lot of progress. Let's remember how far we've come. And we have a ways to
Russell's really not bad either, guys.
We're not looking at the very high inflation rates that we were seeing 2 years ago.
Courtney Brown from Axios. Thanks for taking our questions, Chair Powell. I wanted to follow up on something you mentioned earlier on housing inflation. There's kind of been this long-awaited disinflation in shelter that still hasn't arrived. So I guess 2 questions. How do you explain the substantial lags between some of the private sector data we're seeing and the government data? And how confident are you that rents will be helpful on the inflation front in the coming months?
So essentially, there are places in the economy where there are just lag structures built into the inflation process. And
15 retest from the other side on ES. Russell retest of 24s from the other side. Love to see bids be able to maintain this. See if these sellers are no longer present and willing to move price up.
market rents are barely going up at all. The inflation in those has been very low.
5 minutes until new 15s.
Before that, they were incredibly high. They sort of led the high part. So what happens is those market rents take years actually to get all the way into rents for tenants who are rolling over their leases. Landlords don't tend to charge as much of an increase to a rollover tenant for whatever reason. And what that does is it builds up a sort of an unrealized portion of increases when there have been big increases. And what happens is, it's complicated, but the story is it just takes some time for that to get in. Now, I am confident that as long as market rents remain low, this is going to show up in measured inflation, assuming that market rents do remain low. What will be the exact timing of it? I think we've learned that the lags are longer. We now think significantly longer than we thought at the beginning. And so confident that it will come, but not so confident in the timing of it. But yes, I expect that this will happen.
Thanks.
Nice hold of our 24s, pushing now.
Thank you, Chair Powell, for taking the questions.
Need over 27, or that'll be your pivot still.
It seems that over the past 3 or 4 years, economies and central banks in developed markets at least have been on more or less the same trajectory. Easing during the pandemic, fighting inflation with restrictive policy on the way out. Feels like that may be ending in 2024 based on some of the economic data from Europe and the US and Japan and statements from those central banks as well. So my question is, what considerations or risks does a period of more divergent global economic trajectories and central bank policies present for the FOMC?
So you're right. I think that may happen, and you know that we all serve domestic mandates, right? So I think the difference between the United States and other countries that are now considering rate cuts is that they're just not having the kind of growth we're having. They have their inflation is performing.
Powell just comments that the other countries considering rate cuts are not experiencing the growth rates that the US is.
So we actually have the luxury of having strong growth and a strong labor market, very low unemployment, high job creation, and all of that. And we can be patient, and we will be careful and cautious as we approach the decision to cut rates. Whereas I think other jurisdictions may go before that. In terms of the implications, I think obviously markets see it coming. It's priced in now, and so I think the markets and economies can adapt to it. And I think we haven't seen, in addition for the emerging market economies, we haven't seen the kind of turmoil that was more frequent 20 years ago, 30 years ago, and that's I think partly
21 hold, back to our 24s. Same as before. Need to see it become supportive. Hey, mark 20.
Inflation, and so they're navigating this pretty well.
I didn't. Over 27s, we trade back up the highs. Probably a new high. Until then, you're trapped here, waiting for Russell to make a decision. Can I go over NQ? I can, but I don't recommend you trading it.
In the labor market and the economy likely needed to bring inflation back down.
So you're right. I think we thought, and most people thought there would have to be.
I haven't been watching NQ Dom, so you're gonna have to give me a second to get familiar. Looks like 60s is where our seller is trying to hold.
All the way down from the very high levels it was at the beginning of the session. That did didn't happen. That's a tremendous result. We're very, of course, gratified.
Can I go over why am I not looking at NQ? Because it's a bit too volatile. Whereas with the Russell right now, with banks being included in there, both regionals and our majors, with ES as well, you're getting a lot more of a systematic rotations, where with NQ, it's a bit more volatile with tech. Just seeing that. So I'm watching Russell more so to let me know where we're headed, playing off of those pivots with ES. It's because I have the structure on the higher time frame, and we're respecting that structure quite a bit.
We can't be guaranteed that that's true, though. And
yeah, a 15-second candle in NQ right now is creating 20 minutes on NQ. So, like, it's a bit rough. The key here is that 7-Elevens... 7-Eleven... 670. This is where like 90% of your buy side liquidity is. Is this like 7-Eleven to 674? Below that, you don't really have a ton.
Powell says it's possible the labor market can
until
stay
31
strong with lower inflation.
I said an unexpected weakening is the way I characterize it. So, and I'm not going to try to define exactly.
And then below that, there's like actually nothing. Down to like
Powell says
85.
a rise in unemployment would have to be meaningful for us to react. It would have to be a broader thing that would suggest that it would be appropriate to consider cutting rates.
It would be appropriate to consider cutting. I think whether you decide to cut will depend on all the facts and circumstances, not just that one.
Chair Powell, thanks for taking the question. Kyle Campbell with American Banker. You've said that broad and material changes are needed for the Basel III endgame proposal, and you've mentioned that a reproposal is something that's on the table. As you've had more time to sort of sit with the public commentary, process that, and understand the options available to you, do you have a better sense of whether a reproposal will be necessary? And do you have a timeline in mind for when some sort of movement will be made on that front, either a reproposal or a move to finalize?
So let me start by saying that the Fed is committed to, completing this process and carrying out Basel III endgame in a way that's faithful to Basel and also comparable to what the other large comparable jurisdictions are doing. We haven't made any decisions on policy or on process at all.
NQ needs to get over this 73.75 basically and bid, show an aggressive bid, or we look for rotations back down to 36 for NQ. You're trapped in this range, right? This is our current range. We will get a resolution on a hold below and a push down back into this buy side liquidity, or a bid above and the acceptance outside, and then continuation off of it, right? Like that's the current auction right now. NQ is just a bit volatile with the movements, so with the lack of liquidity in it, you're going to potentially get offside while still being correct. It's just very fast on tape right now. So being wrong is going to be very punishing. That's why I haven't been talking about it.
Chairman, what can you tell us about the approach that you take with your role in the sense of trying to achieve consensus? Which you recently
Whereas like we have very defined levels on ES, with this 2150 to 25 being our resistance, and then 1550 being our pivot, right? 15s. If we find acceptance below 15s, we know where we're headed and we're coming back down into this low. If we can make it supportive, we know we're coming back up into these highs. So like just having more information at my disposal and information that is respecting areas that we're familiar with just makes a lot more sense to me, and then trading off of that. That's why
diversity of voices and perspectives. We really don't. And it's one of the
these moves seem much more systematic, whereas NQ is just balancing for ES and RTY to make a decision.
Economic staff, not the people who work here at the board. There are different people, and and so each reserve bank has its own culture around monetary policy and its own approach and that kind of thing. It guarantees you a diversity of perspectives. So I think that the perspectives are very diverse. But in terms of dissents, we have dissents, and a thoughtful dissent is a good thing. if someone really makes you think, that kind of thing. But all I can say from my standpoint is I listen carefully to people. I try to incorporate their thinking, or do everything I can to incorporate their thinking into what we're doing. And I think many people, if they feel that's happening, you know, that for most people, most of the time, that'll be enough. But I'm not. I mean, it's not, you know, frowned upon or illegal or against the rules or anything like that. It just is the way things come out. And I mean, I think we have a very diverse group around the people, frankly, more diverse than it used to be in many dimensions, more diverse both from the obvious, you know, gender and demographic ways, but also we have more people who are not PhD economists. So we have people from business
and Fed's Powell ends the press conference. So again, Fed's Powell has concluded his remarks. Just going to go over some of the key things that Powell did mention there.
All of us read these stories about the lack of diversity, and we look around the room and say, I don't understand. I really
So Fed's Powell says we do need to take signal from these three worse than expected inflation reading. And Powell noted that the signal that they're taking from this is that it will take longer to get on a sustainable path to the 2% inflation goal.
Powell said diversity of mind.
Did also react to Powell when he said that it's unlikely that the next policy move will be a hike. And as he did say as well, that they believe that over time, policy is sufficiently restrictive to bring inflation back to 2%. So just in the wake of Fed's Powell's press conference, then the S&P 500 is up around 1%. The dollar is giving back some of its losses that it made during the presser, but it is still down 0.2% according to the Dixie.
Reoffer on NQ 36s. Need to see if this holds. Back down to our buy side liquidity here at 11s to 74s. Same thing with ES down into our 104.50. Ideally, we see this bid. I could see it go a little bit lower than this and still be bullish, but really relying on the Russell to be able to find a low. We know that there is a buyer at 11.1. Hopefully we don't need to make that full move down and we can recover our 21s here, but understand that we are dragging lower highs with NQ and RTY leading up. So need to find a bottom on those before you can feel confident looking for more. J-Pow just ended speaking, so we could retrace the entire move. We could stay, you know, chop here. I don't have an answer for you. It's going to be dependent on what happens next. We can play off of it. Just telling you where liquidity is, not what's going to happen. With how illiquid the market is right now, expect volatility. I'll tell you where the seller is, I'll tell you where the buyer is. We want to hold it, we want to recover it. Simple. Play off of the levels. 21s has been a key level to trade around for the Russell for directionality. Up Nick. It's your full move on NQ down into 74s off the rejection of 36s. I'm now deleting this because this is played. Now we wait. Russell coming down into our lows at 11.01. Want to see if buy side's willing to defend that. This is our look below our 104s that I was looking for before on ES. We need to see a lift with the Russell and NQ here, or we will continue back down through our range. We want over 109s, so that'll be our offer on ES from the look above, from the look below 104. you're looking for. 74s, right? Bid, push back up to our 11s. We want to see 11s become supportive for a push back up to 36s. If this stays offer, then you still have just lower highs, lower highs, lower highs, right? So this is an important point. Understanding where buy side liquidity was and understanding like as we come back down into it, looking for that relief move. It's just like, this is what you have to do. Start 36s, see if the offer still holds there. I'm trying to now manage 3, so bear with me. Still focusing mostly on Russell ES, but you have the levels for NQ chart. Back to our 15s ES and our 21 resistance on RTY. This should decide where we're headed. 21 major pivot on RTY.
Commentary from Double Lines Gundlach says, my base case seems like one rate cut this year. Don't see
Yeah,
it coming
on
in
the
June,
15. So I found that the liquidity down at 11. We have a short-term pivot at like 1650 as well. I don't know if it's important or not yet. I need to look at the DOM, but it's like 16.5. I don't really want to see us go below that. 21 rejections so far. That's also on the 15-minute footprint. It's the 15 level, and we have 3 stacked POCs there, as well as like a huge delta shelf. But I came up with that level before we traded into it. It's an old level. Flirting with our edges, right? Just looking to see if bids can step in. First look over 21s here, seeing if the bid will follow. You have liquidity now being offered back up at 24s. Not much from sell side here on RTY. Remember, major resistance on NQs, the 62 to 73. You need to see the look over 75s and bid for us to get any more, or this will be where our seller is offering again. Watch 36 as we retest. Yeah, NQ 10, ES, you can try like 1 or 2. I have mine on 2. Price scale factor 20. RTY. I think it's probably the same as ES. I have it on 2. I don't find the RTY one all that useful, to be honest, other than for right now where we're just seeing like the major deltas. And then like the POCs. Problem on the Russell one is that most candles, I feel like POC ends in like the higher end of it. So it just doesn't feel really great for rebid. 62, still resistance on NQ, seller still very much present there. This is where we want to see the bid ideally hold at 36s, bottom of our range for this node, right? Just as before, the same. We want to see buy side step in at this edge and be able to lift us off of this. Holding this is ideal. This becomes resistance, we look for a rotation back down. We understand that this is our major resistance on NQ, and 21 is our major pivot on RTY. As long as those are holding and we're not seeing aggressive bids above from buy side, we respect that as the high. I think this level's meaningless. That's why I didn't have it drawn. Be better. Bid step in here, we rotate down, new low. New 15's just open, so we're getting some action with that. Back down to our 11s where that POC is. We really want like buy side liquidity to still maintain here. Or it just feels like a reaction back down to like 660 makes the most sense on the Russell. So if you've already forgotten, this is basically our node. This is like our mid pivot to let us know direction wise. Like if we're rejecting this, we're coming back down to the lows. If we're supporting this, we're coming back up to the highs. But like these are our two main pivots, this blue box and this red box. Orange is just the mid. So this is kind of our interaction point. Whereas if we're maintaining here, things are still fine. But we start to lose this, then full retracement makes the most sense, right? So like we want to see if this price can oscillate here, if this will bid back up. We start to lose this high and show acceptance below, and then we see 87's loss, get lost, right? Like coming back down to fix the structure just makes sense. There's nothing there. So maintaining our major pivots is incredibly important here. Remember, like, JPow's done talking, so now you have price just digesting the move. And with lack of structure, right, only thing that we can rely on is where these previous buyers were in this push up. And then just our higher time frame levels from a previous week. So playing these rotations on ES, understanding, like, where we want price to hold and a failure to hold, should allow us to let us know, like, this 87.50 doesn't hold. Like, okay, not a great look. Gonna come back down to our basing structure. Something like this. This is NQ into next target here at 31s. Oops. This is like your last line of defense here on NQ. Down at like 72.85. So 31s we really want to see be able to bid as we're pushing in at the 87.50. Russell needs to reclaim that 11. So that this buy side's still viable, or again, like, just we're gonna rotate down to fix structure, come back down to our VWAPs, you know. Need back over 12s on RTY. Huge sauce. Nice. Yeah, I think that's fine. Careful. If we push back over 87.50 and supportive, then just look back for push to. As long as we're holding this, though. As long as the Russell continues to fall, like the market continues. I can't stress that enough. Like Russell topping is what. Scroll out a bit. There's a reason why I was so focused on it, because it's affecting our market.
That
understanding like our key pivot at 21s. This is our downtrend. Until this stops, like, keep going. Into our 62s, understanding that that's our key resistance with our 21s. Down. 15s, down with our 21. Into our 62. Sellers are still present, they're still present. That's what it is. This is where we start to look to see if bids will step in to defend or if we're come all the way back down to 65, 60. This is kind of like your last shot here. We're just coming back down to VWAPs, right? So keep that in mind, that as we approach these VWAPs, we want to be very careful with short side positioning because we're getting close, right? We've done the full reversion. So these are our VWAP targets. We're here. Now we see if buy side's willing to interact or if they become resistant. It's just retracing a garbage move. Return to VWAP. We lost our buyers up at the highs. And it's like, okay, well, if there's no structure, then like, what are we doing? If those buyers are unwilling to keep us up there, we come back down to where there was structure. We are now there. Need to see acceptance over 045 on RTY. It's a perfect bounce on ES, VWAP, and yeah. ES, we need to see a lift over 85.50. We're currently battling with this LVN. This is where our seller is, right? Does this imbalance hold? We find out too. We want to see acceptance back over 87.50, back up, back into this node. Sell side's still relevant here. NQ value high test projection so far. Watching for the higher lows. Russell holds our pivots, then bug. This is NQ into our VWAP again. RTY now pushing into VWAP. Test. Yeah, good job. Good trade.
Noting the Dixie, still down 0.22% on the session.
where I look for excitement from Russell. Move your stops down on shorts if you're in it, in anything, just as we push down into Russell VWAP to help us decide direction. I feel like we maintain VWAP and make it supportive after chopping around it for a bit, or we'll just rotate our balance from the day. I really don't want to see price below like 65, 60 area on an ES. I want to see Russell kind of maintain it's 98.9, or just like we've got this LVN and then we've got structure back down to really want to see this uphold. That was so much talking. Holy. From
La sveglia suona, il mondo è grigio, ma in cucina c'è un amico, nero e caldo, pronto là, una tazza di caffè che viva.
We've been listening to nothing but AI music for the last 2 hours. Another test of our 2045, or our 045 on Russell. Major pivot. Need to lift above or it's the top of the range. Same with our value high retest on NQ, still resistance. I'd like to see 72 bid if it was going to hold the higher low. If it doesn't, right? It's just another rejection of value high. Think about it like this. You have a node here, right? So if that 72 doesn't bid, then come down to the low of the... Now you have to battle.
Market on close imbalance 1.3 billion to the sell side.
$65 target finally hit on ES. 60-65 hold is supportive, or we just retrace this node below us. That's that. Back down to our basing. This is our node, right? Can we find support here and build, or do we need to come back in and rotate? Yep. Have a good day, man. It's our NQ 30-second opening range. Same with ES. Back to it. Russell still has a bit more room down to the 30-second opening range.
The S&P 500 turns negative, last down 0.13%.
Canvas of black, starless night, Loomis and streetlights only back. The heart pulse of the city, 5%. Enter the jazz club where magic rise. Swirling smoke and laughter loud. Drum brushes soft yet proud. Heartbeats keep time alive. Under the neon, passions ignite in the wild. Just a endless night, basking in the sultry, seductive light, savoring every taste of the city's night flight. breathless heart. Each soul a beat, each dream a different part. Seeking solace in the mess and mundane. Swept by rhythm in life's ceaseless refrain. Cobblestone streets gleaming under neon hues. Tales of love and
Probably one more leg down on the Russell before we decide if we need to come back down to test this 88 or ETH high, back down to value. Yes, you're just looking for 56s to basically hold. It's our major pivot. Talking about it for days. 56, 63, where sellers want us to maintain low. And just watching Russell as we come back down into value here. 88. Good job, Cass. Yep. It's nice knowing where you're going. Alright, well, you got me for the whole day, so GG's on that. Yeah, I mean, we'll see what happens tomorrow. I'll be here 9:30. Same drill. Hopefully you had fun trading bounce this morning, and that clicked with you at least. Hopefully you didn't die trying to trade the FOMC candle. I tried my best to narrate. Definitely hard. Yeah. Nothing really much else to add. Just back down to value. So, no real change market-wise. You love the music? It's all AI. I'm just going through other people's created songs. Huge. You should play around with it, Nick. It's actually really fun. Here. You get 10 free songs with an email registering it. Played around with it for a couple hours the other day, just making new accounts. It resets, I think every day you get another 10. Or you can just pay. But like unlimited genres, and you can even like change the lyrics to a different language.
Time, we get the RBNZ news conference following the financial stability report
a lot of
released
fun
last night.
Just insane how far we've come. Down 70% earlier, stopped out, break even. Now it's down 10%. Yikes. Glad you stopped out though. Here, I'm gonna go back to full screen on just ES. We kind of took our higher time frame chart. Oh no, this one. Just to give an understanding of where we are and what we just did. It's like utilizing these LVNs as sell side until we see acceptance back in is like your best friend in the world. I'm telling you. Like, it's such a simple concept, but it's one of those things where it's like, okay, if we're going to go up, we know what we need to see. We need to see acceptance on this edge for a rotation through. We understand that sell side's going to defend this edge until we push in. Oops. Look at our profile on the day. What is this? Ugh. So we're just, nothing's changed. Seller's still in control. Held our 25, 21. Same resistance as before. Could not breach back into our previous balance. Push below 34.30 tomorrow, then we can start to look at these levels below. But as of right now, it still looks like we're just rotating in balance between 63 and 40. No change on the day. Just came right back down before the news. So it'll be interesting to see how we digest overnight. But off of this move, right, we now have potentially a lot of people trapped. Right? And we have this huge basing at the bottom where we had a lot of people looking for more on the down, which helped push this rally up. But on the retest tomorrow, what I'm going to be looking for in the morning is if we do continue down, this is going to be an incredible pivot to play off of tomorrow because of just how much size traded in this area today. I mean, we just chopped, right, in balance for the entire morning session before FOMC. So that it'll become a really nice level to play around. And same goes for upside, right? Like, we have pretty key levels, but like this can easily come back up, race overnight.
In 5 minutes time at 4:10 p.m. Eastern time, we
so
get
just this
RBNZ
56,
news
63 should be pretty key.
Stability
Let us know.
released last
56
night.
more important.
Also in 10 minutes time at 4:15 Eastern, we get Bank of Canada's Governor Macklem and Senior Deputy Governor Rogers speak to the Senate Banking Committee on banking, commerce and the economy. There is a text release expected for this.
Yeah, exactly. Yeah. Because of how much size was traded there. Like, it's such a tight node. But, like, we should be able to get, like, some pretty interesting reactions away from this area on a retest, on a failure to push back through. Or, like we did here, where we accept above this, right? And then that allows us a ton of relief back up. Also, like, again, Do we see how it was just balanced before FOMC and how this becomes really manageable to trade? Like you can get so many opportunities if you understand like pre-FOMC is going to be balance. With that mentality, now all of a sudden you trade your edges. Like it is really something like you can miss this entire move and still have really nice trades on FOMC day. And what's great about it is that we know that price is going to just rotate this node. We're not looking for more. And so when we see this, when we get this excess outside, we can look for that higher low, long, and recovery and rotation back up, giving you really nice trades throughout the day. And that's why I've been like hammering about it so much today, is that like I think that this is a much better opportunity to make money than this, personally. Because this has the opportunity here is to also blow up your account. One wrong trade, one wrong thing that JPOW says, one wrong reaction, right? This has structure. This has very like rules and rotations that are being respected, and it has liquidity. We need liquidity to trade. No liquidity equals this. Don't be on the wrong side of this. I know it seems counterintuitive to like a newer trader, where you're like, no, but this is big candle. I want to be here. It's like, okay, cool. But like, okay, you say you take the wrong side of this trade, and then you get stopped out for the day on your account, and then it goes up in the direction that you thought. Like, was this a better opportunity for you when you could have just been respecting the balance that we've been talking about all day and trading these rotations while having like a very clear defined risk? That's a conversation you have to have with yourself. It feels bad at first, feeling like you're missing out, but unless you see something that really makes sense on a higher time frame, or like discretionary wise, like you see a seller off sides or a buyer off sides and you can play with that, like go for it. But like there's no reason that you feel like you have to be in a trade here. I really want that to like, if there's anything to grasp from an FOMC day or any sort of like volatile day, it's that like you don't need to trade news to make money. All right, that's my rants for you for the day. I'm gonna have zero voice for tomorrow off of today. You guys have a good night. Yeah, free stream Friday. Thursday is private stream. So I will talk to you all tomorrow.
Shortly expecting comments from the RBNZ
Good
news
night.
conference.
Peace, Nick. Have a good one.